Hello everybody, this is Lucas Sacerdote and I'm going to be doing a full in-depth presentation on Canadian Solar. Canadian Solar has become my biggest position. It's a company I've been following since late 2023 and early 2024, and my conviction has increased significantly, particularly in the last couple of months. My aim for this presentation is not for it to be perfect, but for it to be as in-depth and thorough as possible so that anyone who sits through the whole presentation to have a complete understanding of the company, its operations, and its incredible potential upside. I hope you enjoy it, and let's get to it. Okay, so Canadian Solar. I view Canadian Solar as the Western leader in renewable energy. They're an industrial behemoth leading on solar photovoltaics manufacturing, on battery energy storage manufacturing, and on project development and project financing. We're going to be covering a lot in this presentation. The company has a lot of ground and three key different business units. We're going to start with an executive summary, then a macro picture of the industry, their corporate history, their management and team, the solar industry and the market, CSI Solar, their global manufacturing arm, the project demand for their renewable energy technologies, their e-storage and battery energy storage segment, their project demand for their battery energy storage technologies, their US manufacturing, Recurrent Energy, their project development arm, the competitive landscape for Canadian Solar, some litigation risks that we need to be aware of, the incredibly high quality that the company possesses, and the valuation and financial analysis that I do for the company, resulting in the biggest opportunity in the market that I'm finding right now. Let's start with the executive summary. So what is Canadian Solar? Canadian Solar is a top 5 global solar manufacturer. They have built over 170 gigawatts of solar panels historically, which represents more than 5% of all solar panels ever produced worldwide, and they're currently delivering around 25 gigawatts of solar per year. To have some kind of sense of what this scale is, one large nuclear reactor is around 1 gigawatt in size. They built over 170 of those, and 25 of those per year. Moreover, they have a huge project development arm called Recurrent Energy. They are responsible for over 20 billion in projects globally, and they have a huge active pipeline of 23 gigawatts of solar and 83 gigawatt hours of battery storage across 4 continents. Particularly in this subsidiary, BlackRock has invested $500 million into Recurrent Energy at a $2.5 billion post-money valuation, resulting in BlackRock owning 20% of the company and Canadian Solar owning the remaining 80%. Just to keep in mind, the whole Canadian Solar is trading at a $1.2 billion equity valuation. Finally, the biggest upside potential is presented by their US manufacturing. They have 2 huge factories ramping up, and they're the only company in the US currently producing N-type solar cells, which are expected to be the next generation industry standard for solar panels. Their annual revenue as a whole exceeds $5 billion, and their book value alone is 3 times their current market capitalization. I believe their equity value is trading at around 10 cents on the dollar, and it's my biggest conviction by far. I believe Canadian Solar is arguably the leading Western renewable energy platform, spanning from solar manufacturing, battery manufacturing, and large-scale project development, with operations and expertise across 6 continents. How do I value Canadian Solar? Just to do a quick recap before we get into the details. As I said, they have 3 main business units: CSI Solar, Recurrent Energy, and their US manufacturing operations. CSI Solar is a spin-off from Canadian Solar, which IPO'd in the Shanghai Stock Exchange. It currently trades at $7 billion market cap in Shanghai, and this IPO happened in June of 2023. When they IPO'd, they had a lockup for 3 years, which is expiring this June, so a couple of weeks away. Their project development arm, I value them at a conservative estimate of $2 billion in equity value just for Canadian Solar. This is based on BlackRock's valuation from early 2024, and it doesn't take into consideration the huge growth it had since. Finally, their US subsidiary, both for solar and storage, I'm valuing them at around $1.6 and $1.8 billion each. In these subsidiaries, Canadian Solar owns 75.1% directly, and the remaining 24.9% is owned by CSI Solar, which they own 64% of, resulting in a 91% all-in ownership. Just to speed things up for the impatient people that won't stay for the whole presentation, let's do a quick search on these equity valuations. CSI Solar is an industrial behemoth. They trade at 48 billion Chinese RMB. They had IPO'd the 9th of June of 2023. In the 9th of June of this year, the lockup expires. And this is a company publicly listed, publicly trading, with an average volume of 68 million shares traded daily at a 13 Chinese RMB a day, which would equate to over $100 million of US with regards to CSI Solar stock, all of them agreeing that the market capitalization of this company is around $48 billion, which would result in $7 billion US dollars. And Canadian Solar owns 64% of CSI Solar. Overview: expected to hold approximately 64% of CSI Solar shares, so Canadian Solar owns 64% of CSI Solar shares. Moreover, the Recurrent Energy, their project development arm, in early 2024, they received a $500 million investment from BlackRock. This is the PR after the closing on October of 2024, where this investment resulted in a 20% of the outstanding fully diluted shares on a converted basis. Again, so another public comparison that the company owns significantly more equity value than it's currently trading at. Finally, the US subsidiary both for solar and storage represent one of the biggest upside potential in Canadian Solar, with an expected 10 gigawatts of annual capacity by end of 2026. By the second half, they expect to have a 10 gigawatt nameplate capacity for solar module manufacturing and 6.3 gigawatts of solar cell capacity by end of 2026. All in all, I believe this company should be worth upwards of $9 or $10 billion, and it currently has a market capitalization of $1.2 billion. Their ticker is CSIQ. Google displays a $900 million market capitalization. If we take into account the fully diluted shares after some convertible notes, it would be $1.2 billion. Nonetheless, incredibly undervalued based on their actual assets and their actual operating businesses that they have. This has been a very cyclical company with violent moves both to the upside and to the downside. And I believe currently it trades at one of the most distressed times it has ever had and represents, in my mind, the biggest opportunity in the market out there. So why does the opportunity exist? I believe there are 4 factors that partially explain why the market has gotten this so wrong. And this is exactly the kind of setup that we look for. First of all, there's non-existent coverage. There's no sell-side analysts that are actually doing work on the company, that are doing evaluation on the sum of the parts, that are trying to digest their economics. No one is actually putting in the work to actually analyze and value the company as it should. Moreover, they have a multi-segment structure. They're a holding company with multiple business units within it, which resists easy categorization. Valuing the company is not that easy, so many people just do not put in the work. They have a China discount from their CSI Solar operations, but this discount is bleeding into businesses with no China exposure at all. Their project development arm and their US manufacturing subsidiaries have no China risk, yet this China discount is being applied to every business unit that they have. Finally, they have a huge upcoming catalyst with their US factories ramping up, which is real and they're already operational, but have yet to be visible in the reported financials so far. This will not last for long. I believe the market to be a forward-looking mechanism, and I should believe that a re-rate would happen fairly soon, and a violent one, if I may add. I mentioned there's basically no sell-side coverage at all. The only analyst that is trying to put at least a minimum effort on this company comes from UBS. In late 2025, the US analyst came up with a price target of $37 per share. But the thing is, this price target derives from trying to value both CSI Solar, their manufacturing arm, and Recurrent Energy. Their estimates for Recurrent Energy around $25 per share, I largely agree with, maybe with a different kind of assumptions here, but this valuation seems relatively fair. But the most meaningful part here is that when they try to value CSI Solar, their Chinese analysts come up with an implied value for CSIQ of $116 per share based on Canadian Solar's ownership of CSI. However, the US analyst then applies a holdco discount of 90%. 90%. I mean, I do believe a China business entitles a discount, but whether that is 90%, which is basically even lower than liquidation value, it's extremely exaggerated in my mind. You can see that this analyst basically has placed a price target depending on the share price performance, and this recent upgrade came after the stock price surged. All in all, I think Canadian Solar trades at a 90% discount to the market value of its sum of the parts. Canadian Solar is trading at a $900 million market valuation. If you take into account the fully diluted share count, it would be around $1.2 billion. Yet CSI Solar is worth $7 billion. Furthermore, they have a direct comparable called T1 Energy, which is a spin-off of Trina Solar, which is trading at a higher market value than Canadian Solar, with significantly less assets, significantly less robust balance sheet, significantly less financing. They're well behind Canadian Solar under US operations. They do not have project development, and still it's trading higher than Canadian Solar. Moreover, Trina Solar, so the parent company of T1 Energy, they are valued at less than CSI Solar. Trina Solar is valued at 38 billion Chinese RMB, while CSI Solar is valued at 48 billion Chinese RMB. Why? Because Trina Solar lost $1 billion last year, while CSI Solar was the only solar manufacturer in the world that is profitable outside of First Solar, which is a significant competitor. Just taking into account CSI's ownership from Canadian Solar is trading at a 73% discount, which is huge. And this doesn't even take into account their equity ownership in Recurrent Energy, one of the largest project developers in the world, and leading US manufacturing operations, both for solar panels and battery energy storage. Moving on to the macro picture, we're all very aware of the Iran war and how unfortunate this is. I'm praying every day for it to stop. A clear outcome from this war is that energy insecurity from the Iran war is boosting demand from clean energy solutions. Energy supply chains and energy resilience and redundancy is increasing its importance in every policymaker in every country, and we're seeing multiple countries starting to push for a more aggressive move into renewable energy in order to diminish the reliance on weak and highly disruptible supply chains. Moving on, renewables and storage are positioned to meet most of the incremental US power demand through 2030. We're all very aware of the demand and supply imbalance for electricity in the United States, and it's expected for renewables and storage to account for 413 terawatt hours of this electricity supply, representing around 75% of all the increasing electricity energy additions in the US. This is dominance at its peak. Moreover, we're already seeing the TAN ETF, the TAN is the solar ETF for predominantly US companies, already breaking out. And we're seeing the most sophisticated investors in the world, for example, 13D, which is one of the few research outlets that Stanley Druckenmiller subscribes to, being increasingly bullish on electrotech, including solar, wind, batteries, electric vehicles, and heat pumps. So I believe this is the exact sweet spot one wants to be at, where it's still a contrarian view, but the most sophisticated investors out there are agreeing that the outlook for this industry is bright. There are multiple demand signals we can see that show the strength in the industry, predominantly the PPA prices that are going up. PPA are power purchase agreements, is the price the grid pays for the electricity you deliver, and you can see how these PPAs had plateaued since 2020 and has started to ramp up in 2025 because of this persistent supply and demand imbalance for electricity generating assets. This is another example of NextEra, the biggest utility in the world, already saying that they expect to create value in their energy resources portfolio by recontracting opportunities at a higher PPA prices because of this demand-supply imbalance. We can see that solar is cheaper than gas. This is a study done by Morgan Stanley Research Estimates, where they see solar being between 34 and 12% cheaper than gas in 2025 and between 42 and 15% cheaper in 2030. Even if we take all tax credits, solar would still be cheaper, around 29% or 12% in their base case, with their bear case being 5% more expensive than gas with no investment tax credits. But still, solar is cheaper and is faster and is modular, it's easier to operate. It's the only technology that can ramp up in this incredible surge in power demand that we're seeing. My macro thesis is that it's all about energy. This graph showcases how GDP and electricity consumption are correlated to a very meaningful extent. As energy consumption increases, GDP increases as well. We can see that there's no country in the world where they have higher GDP and low energy consumption. Clear one-on-one correlation between them. My belief is that it's all about energy. Energy is a key driver of GDP growth and human progress. It goes back thousands of years. For example, when humanity learned how to better source energy for themselves, food is energy for a human being, it's calories. Agricultural improvements led to a more abundant source of energy for humanity, leading to a significant growth in quality of life. Following on, we had industrial machines and combustion energy, where again, we were able to increase our quality of life by using machines that enhance work and output for human beings. The energy that we supplied these machines with was fossil fuels. Then we had the third wave with electrical machines and the electricity wave. Here you have the light bulb, many appliances in your home, refrigeration, or the internet, whatever. And my main takeaway here is that the main fuel of energy going forward will be electricity, predominantly in the fourth wave that we're about to see, where you have AI, blockchain, finance decentralization, autonomy, whatever you want to call it, all of that runs on electricity. And the way to provide electricity, the most efficient way to provide electricity, is through renewable energies. Also, energy sources remain important. Oil and gas are deeply embedded in modern life, from transportation to food production. Even fossil fuels are extremely embedded in food production, in fertilizer, in multiple ways that we are not even aware of. I do not believe that fossil fuels will get replaced, but my belief is that combustion-based electricity generation is inherently inefficient in producing electricity. A significant energy is lost in conversion. On the other hand, renewables are fundamentally different. Humanity has learned to arrange materials from the earth to capture abundant solar energy and convert it directly into electricity. So through solar panels and batteries, that energy can be generated, stored, and deployed on demand. And as this electricity demand continues to rise, renewables are uniquely positioned to meet it efficiently, at scale, and on time. In this renewable energy industry, China has a complete dominance, and Canadian Solar particularly has a very strong competitive advantage for the upcoming years. We've seen China weighing on curves on exports of solar manufacturing equipment to the US. This was recently announced on April 15th of 2025, and we already seen from last year that China's new weapon in the US trade talks could be batteries, for example. So they command a huge lead on the renewable energy industry. And one of the main questions that one can have with a renewable energy company is, do they already have equipment in the US to produce their products? Well, Canadian Solar does. Canadian Solar is the only company in the US that has already the equipment in place and operating for their solar cell plant in Jefferson, Indiana, as we speak. And the first cell should come off the production line by end of March. So this already happened, and it should be fully ramped by the end of June. They have a first mover advantage in the US that none other company has. Going into the corporate history, there are 7 main points I want to highlight in the Canadian Solar's corporate history. First of all is that in 2018, the CEO and founder, who holds 20% of the company, wanted to take the company private at $18 per share. The board ultimately rejected this take private attempt, taking into consideration that the current share price is $13 per share, and the company has grown significantly since. In 2019, since he wasn't allowed to take the company private, they established a $150 million share repurchase program between $15 and $20 per share. Then, in 2020, they took advantage of favorable capital markets and issued $230 million in convertible notes only for CSI Solar, their global manufacturing arm. So while the company was still very undervalued, under $2 billion valuation, they raised $230 million just for CSI Solar at a $1.1 billion valuation. Then in 2021, after an incredibly rapid surge in the share price, they took advantage of that and they issued $150 million at $41 per share. So the company is clearly very aware of capital markets and is willing to buy back shares at a low price and issue shares at a higher price. Then in 2023, taking advantage of favorable capital markets in China, CSI Solar did an IPO in Shanghai, raising almost $1 billion at a 5.7 valuation, at a higher valuation than Canadian Solar as a whole, and Canadian Solar retained 64% of this company. Then in 2024 and 2026, Canadian Solar, not CSI Solar, Canadian Solar, the holding company, they issued two types of $200 million convertible notes, and this was particularly to capitalize their US manufacturing endeavors, where they could not tap Chinese capital markets because this was focused solely on the US. This is a screenshot from the 2018 board rejecting the take private by the chairman and chief executive officer. In 2019, they issued $150 million share repurchase program. In 2020, they raised $220 million at a $1.1 billion valuation just for CSI Solar. In 2021, they raised $150 million at $41 per share. Then in 2023, they did a spin-off of CSI IPO, raised almost $1 billion at a $5.7 billion valuation, and today it's trading higher than that at a $7 billion valuation. And then in 2024 and 2026, they issued two $200 million January 2026 convertible notes. My conservative estimate is that now the fully diluted share count is around 19 million shares. Moving on to management and the team. First of all, let's start with the employee count. Canadian Solar has 12,500 employees. They're a huge company. They're an industrial behemoth. But take into consideration that this number has gone lower because operations have become increasingly efficient. Employee count used to be 22,000, then 17,000, and then 12,500 in 2023, 2024, and 2025 respectively. So this is a huge industrial behemoth that is only getting more efficient by the day. Then, this is a very important point, they are founder-led, and the chairman and founder owns 20% of the outstanding shares. And if you take into consideration the fully diluted share count, he owns around 15%. But what's most important here is that the chairman only owns shares in Canadian Solar, only owns shares in CSIQ. He owns nothing of CSI Solar. He owns because Canadian Solar owns 64% of it, but his whole incentive is to maximize the shareholder value of CSIQ. So as a long-term investor, I rest assured that my interest will be taken care of because the chairman and founder's whole incentives and whole ownership resides in Canadian Solar, in CSIQ. The chairman and founder is called Dr. Sean Q. He was born in Beijing, but arrived in Canada in 1987 as one of the first students allowed to study abroad. He's now a Canadian citizen, and the story goes that in 2001 he founded CSIQ with personal savings. The company emerged because Dr. Sean Q won a contract to supply Volkswagen in Mexico for some solar panels that they needed in their Mexican operations. He didn't have a company, he didn't have anything, but he had to build it from scratch to supply this contract, and that's how Canadian Solar emerged. Then in 2004, the German government came out with solar incentives which opened the European market, and because of his already existing relationship with Volkswagen, that opened the doors for Canadian Solar to establish itself in the European market and then to grow into one of the biggest solar manufacturers in the world. They listed themselves publicly in the Nasdaq Stock Exchange in 2006, then in 2010 and 2012, they survived this industry shakeout via conservative balance sheet, and they also pivoted into solar project development while the industry was overbuilding. Then in 2014, they acquired Recurrent Energy, a US developer, for $265 million. And take into consideration, 10 years later, BlackRock invested $500 million at almost 10 times the valuation they paid for 10 years ago. His leadership style is described as a very low-key, modest, and unassuming, but extremely deliberate and very intelligent. He's self-described as a pragmatic engineer who builds step by step. He has delegated day-to-day operations to focus on strategic vision. He's fairly old now, and he had some health issues that put him in a wheelchair. So I'm not surprised that he has delegated day-to-day operations, but his focus remains on the strategic vision, and he's still deeply motivated by solar social impact, with his dream being to see a solar panel on every household. Let's hope that dream comes true one day. Canadian Solar has undergone some corporate restructuring, predominantly because of Dr. Sean Q's age, but also because of the OBB compliance rules. Having an American leadership plays better for the US market, and the new president is Colin Parkin. Colin Parkin used to be the president of their battery storage division, which is the most profitable and with the highest growth in the company, and he has now moved to being the president of the whole Canadian Solar. Previously to being the president of the e-storage business, he used to be a VP for Recurrent Energies for the project development arm. Moreover, they also changed their chief operating officer, naming Dylan Marks as their new COO. Dylan Marks used to be the VP for operations of Recurrent Energy. So he's deeply embedded in the nitty-gritty work of operating a highly complex company. And they're both US citizens. Let's move on into the solar industry and the market. I have already covered this extensively, but we already know that renewables value proposition is unmatched by any other energy technology. The cost of solar panels is by far the lowest one, and battery energy storage costs are coming down significantly as well. And this is also from NextEra's investor presentation, where they show how solar and wind are the cheapest technologies out there, and most importantly, they are the fastest to deploy by a significant margin. The global market share for renewable energy, and particularly for solar panels, is dominated by China. China holds 93% of all polysilicon production, 97% of all wafer production, 91% of solar cells production, and 83% of solar modules production. Solar modules is by far the easiest component to onshore. It's basically assembly. Solar cells is a little bit more difficult, solar wafers is way more difficult, and polysilicon is a little bit easier than cells and wafers, but it still has a high complexity. This is the supply chain market leadership and market composition by companies. This was from 2023, but you can see how Canadian Solar already shows up here with a significant presence in wafer production, in cell production, and in module production. So Canadian Solar is one of the very few companies that is vertically integrated. They did not go into polysilicon. These are two different types of businesses. Polysilicon producers mainly focus on polysilicon, but then they have a huge vertical integration spanning from ingots, wafers, cells, and modules, which will play a key role when expanding their US operations as well, while still being a top global solar and battery energy storage manufacturer worldwide. The US solar industry is starting to become more meaningful as we speak, but still we have a very important problem, particularly in solar cell production. These were the numbers from 2025, and these are the numbers from 2026. What we can see is that solar module factories are already operational. As I mentioned, this is the easiest step to onshore production. However, solar cells is by far the biggest bottleneck in the industry. While we have significant solar cells factories announced, none of them have become operational in the last year. We do not have wafer and ingots production in the US, but we do have polysilicon. Polysilicon does not represent a supply chain risk in my mind. It is more expensive in the US, but there's ample supply for everyone. This graph showcases the historical deployments of solar in the US market and how in the last 2 years they've been above 40 gigawatts per year. And they have become by far the most meaningful technology additions for the electric grid of the US, representing around over 60% for both previous years. Solar panel costs have come down significantly in the last couple of decades. Because of technological advantages and material science, the industry was able to reduce these costs significantly. However, it seems that we're already reaching a bottom. We saw during the last year how both PERC, TOPCon, and HJT prices in the US have risen. This also happened in Europe, and particularly in China. We saw in the last couple of months how TOPCon solar modules have climbed over 30% since mid-December. And this is a publication where they say that Jinko Solar's average prices, Jinko Solar is the largest solar manufacturer in the world, predominantly China, and the Chinese government probably has a strong influence on the company, where we can see that their prices for domestic and overseas modules have risen between 30 and 40%. So what my belief is that the pricing in this industry, while it's a commodity, while it's cyclical, it has reached its bottom and it's set for a brighter outlook going forward. There's something we cannot ignore, which is that US solar momentum is becoming hot. Suddenly, MAGA, Make America Great Again, suddenly it loves solar power. And also, this push has been led by many strong public figures, predominantly Elon Musk, where he says that we're not bullish enough on solar and that he plans for both Tesla and SpaceX to build upwards of 100 gigawatts per year of solar power. Moreover, this is a quote from Brooklyn Renewable Partners, one of the biggest renewables operators in the US, where they mention, so on solar, we're seeing no change, if anything, an acceleration, and we're trying to pull projects forward as fast as possible. This is because there's a structural demand-supply imbalance for electricity, and the only electricity technologies that can meet this imbalance are solar and batteries. Keeping with solar momentum becoming harder to ignore, let's take a couple of seconds to listen to Chris Wright, the Department of Energy's secretary. He used to be vocal against solar, incredibly against solar, and now he's becoming to take a more moderate tone. He's not extremely bullish on solar, but at least he's not bashing on them, and he's not demonizing solar as he used to.
No, it's not that big of a deal. It has been a great industry for China. They sell the solar into the whole rest of the world. It's not 2% of Chinese energy, so it's not meaningful for them today. I hope its role grows in the future. Look, I'm in general pro-solar. I worked in it. I hope it grows in the future.
We'll mark that down for everyone who has ever said Chris Wright is not pro-solar. That's the moment you said you're pro-solar energy.
Yeah, in a market capacity. No, and I've always said that. But yeah, we don't want to subsidize stuff that makes electricity more expensive.
Thank you for indulging me. We're now going to move on to...
What I take away from these two is that his focus is on a market capacity. He doesn't want to subsidize things. I'm all for it. Let's take subsidies away from everything. If we take them away for solar, please take them away for gas, nuclear, and oil, everything. And in that scenario, if it's a level playing field, I do believe that solar and batteries will demolish any other type of electricity generating capacity. Moving on, as we mentioned previously, there's a strong upwards demands on PPA prices because there's not enough supply of electricity, and this is becoming a political issue, and I believe the current administration, the Trump administration, is starting to see that 75% of their voters do agree that solar energy should be used to strengthen the US energy supply. So it is to be expected for them to take a more moderate and hopefully a more favorable stance on what are the most advantageous technologies going forward. Moreover, the global and China solar market size and demand. These are the estimates from Morgan Stanley's research, where they expect for solar power in the world to have plateau and maybe increase marginally in the upcoming years. Still, last year, almost 600 gigawatts of solars were deployed worldwide, which is already a huge place to start from. And this plateau is mainly driven because China's solar installation has reached its peak, probably because it was heavily subsidized by the government, and those subsidies are gradually going away, and they expect some down pressure on the total output of China. But still, the remaining of the world, because China was by far the leading country in solar additions. The US and Europe and Africa and Latin America, Southeast Asia, they're all expected to grow their solar deployment significantly in the coming years. This is the same, expecting China to plateau, maybe dip a little bit, and then resume the growth again. And these are Morgan Stanley's estimates for the US solar additions, where they expect for 2025 numbers to have peaked at 42 gigawatts and then normalize around 30 to maybe 35 gigawatts per year. However, we need to take into considerations that when people gave these estimates, this has been the case every single year. Every single year, the estimates were for the previous year to have peaked, and every single year, those estimates were ridiculed by the actual demand that we saw. Every single time, the actual demand that we saw exploded because this technology is incredibly advantageous, because the cost reductions that were able to be achieved in this industry were mind-boggling, and it continues to be so the case. When analyzing the solar industry and the market, it's very important to take into consideration US legislation. China is by far the biggest market, but the US is by far the most profitable one. However, it's filled with different legislations, including AD/CVD, Section 232, FEOC compliance rules, safe harboring, and many more. Start with AD/CVD. What does AD/CVD stand for? It's anti-dumping and countervailing duties. This is basically putting specific tariffs on specific countries where they decide that anti-dumping is taking place. The winners of the AD/CVD are the losers of the next case. This is right now what's happening in Turkey, for example, where manufacturers are cashing in on their ability to serve the US market. However, we expect that there will be a case filed against Turkey next year. So whenever you try to put a patch on something, another hole comes up in a different country. But this is a very important legislation for the US. For example, Thailand, Vietnam, Malaysia, and Cambodia. Aside from Malaysia, all other countries ended up with tariffs higher than 100%. So this is the US legislation body trying to stop anti-dumping, but whenever they try to do this, another country emerges as a new manufacturing hub. The way to be reassured that this won't happen to you is by effectively doing domestic manufacturing, as Canadian Solar is specifically doing in the US. Then we have to move on to safe harboring. Safe harboring is making sure that all your projects and all your equipment will qualify for tax credits because you already imported them before any changes happens. There are estimates that over 150 gigawatts of projects are already safe harbored. So even with legislation changes, many projects are expected to still go forward no matter the changes because they already achieved safe harbor. Then moving on to Section 232, solar manufacturers and developers alike highlighted Section 232 before FIOC as the policy that they were most worried about, or some speaker put it as keeping them awake. Why? Because this is the most volatile one. This is the one where the most unexpected changes could happen. For example, here the Department of Commerce is calling for a protective tariffs of over 20 cents per watt against solar modules imported to the US, and also of a 10 cents per watt tariff of over quota imports of solar cells. Section 32 is something to keep an eye on. But again, the way to make sure that you won't be affected by this is by doing domestic solar manufacturing, or also battery storage manufacturing. Continuing on Section 232, the proposal for the CPA, that's just one proposal, and the truth is no one is sure how this will end up working, but we're taking the Coalition of Prosperous America's proposal as our base case, and we're expecting something like that. And here's the proposal of that coalition. To keep analyzing the US solar industry particularly, is that we have a wafer problem. There's enough polysilicon supply, but there's not enough wafers. This is from a publication from PB Tech, where they say there's only one company, Corning, that has been producing ingots and wafers in the US. However, this will not be sufficient to supply the market's needs. Corning's annual wafer capacity is approximately 2.5 gigawatts, almost 5% of the total US market. Total cell capacity in the US is estimated to be 3 gigawatts, again, maybe 6% of the total market. However, the US does have enough capacity to produce solar modules domestically, around 35 gigawatts. This is the easiest step to do. It's basically assembly. It's the lowest value-added component in the whole supply chain, but it's the one that the US is the most strong at right now. And the main takeaway from here is that yes, polysilicon from non-Chinese suppliers is more expensive, but there's enough of it. What I'm worried about is wafer, and to a lesser degree about cells. So wafers is by far the problem the US has. The good thing, which we will cover later, is that wafers and ingots were not taken into account when analyzing tax credits. They only focused on solar cells and solar modules. The US legislation also takes into account forced labor, which again, a great way to make sure you won't be affected by this is by doing domestic production. What does all this uncertainty leads to? It leads to pricing power. When there's all this uncertainty, the manufacturers need to have a cushion, a margin of safety, which leads to pricing power and in the short term for better economics. At least that's my industry view. Moving on to what is center of mind for most investors is FIOC rules, Foreign Entity of Concern rules. These rules were published in February of 2026 and they were met with relief, and it plays great for Canadian Solar. The main takeaway here is that there's no wafer problem. Why? Because crucially, it does not account for the cost of solar wafers, ingots, and polysilicon. It mainly accounts for cells and modules. And here it's a screenshot from the publication where they mentioned Trina Solar and GA Solar, which they sold their module production facilities to US-based companies, and Canadian Solar, which restructured its manufacturing business to take direct ownership of its US assets from Canada headquarters. What this means for Canadian Solar is that they comply with Foreign Entity of Concern rules. This is a quote from their earnings call, I think it was Q2 or Q3, where the CEO says, but if you go down each and every of the prongs of the Foreign Entity of Concern compliance, equity, debt cover to officers, IP, effective control, and material assistance, we feel confident that we are compliant. So Canadian Solar has been compliant and will remain compliant for the US tax credits. This is an example of Canadian Solar being able to access tax credits. This is an investment tax credit that was facilitated by Bank of America. And this is another quote from the earnings call where they say, so I think our current strategy is quite solid so that we can, first of all, we'll make sure that our customers will be able to claim their ITC. This is the most important thing. If customers are not able to claim their investment tax credits, they will basically choose another option, because our chairman will meet the OBB rule of the particular year, and also our factory. The 3 factories in the US will be able to claim the 45X. So not only the investment tax credits, but also the production tax credits. And for the 45X, both 45X for energy storage and solar will continue according to the previous schedule. So as you know, there's no change on the like in terms of schedule, in terms of time frame, and also the ramp down schedule of those incentives. And however, there are different material assistance tables for each year. The threshold that you need from domestic production goes up each year, and they will need to make sure that to meet those thresholds every year. The takeaway here is that credit monetization is already translating into cash proceeds, and that Canadian Solar appears positioned to benefit on both sides of the value chain by improving factory economics with production tax credits and by helping customers preserve project returns with the investment tax credits. These are a couple of screenshots that show that Canadian Solar complies with domestic content, and it's one of the very, very few, if not the only one, alongside First Solar, that has domestic content. This is a webinar they did, which I attended in February 25th of 2026, where they highlighted their TOPCon modules with domestic content. Here's another screenshot where they also mentioned TOPCon modules with domestic content. So Canadian Solar has domestic content from their solar panels. US manufacturing capacity, we already mentioned this. There are significant module capacity. Factories for cell production have been announced, but almost none are operational. And Canadian Solar is the only company operating a solar cell factory producing N-type solar panels, the new and better technology going forward. There's enough polysilicon, and there's not enough wafer and ingots, but they're not taking into account for tax credits in the current legislation. From First Solar's 2025 earnings, this is Morgan Stanley's research, where they mentioned that First Solar's technology is unique in the industry. It is similar to EOS Energy industry, where they are the best suited one for the domestic supply of the United States. They do everything from raw material to the final product, but they are more expensive and they are less efficient. And Morgan Stanley's comments are, we view it as supporting a moat only to the extent that it enables a durable cost advantage over CSI competitors. However, we do not view this to be the case, and we believe First Solar's cost per watt to be modestly higher than that of its CSI competitors. So you should expect margin compression from First Solar, and you should expect margin expansion from Canadian Solar. Here, Morgan Stanley's research, they basically are talking that consolidation on China's main solar value chain will be achieved in a more commercial and market-oriented way. If that is the case, better profitability should be expected for these kind of companies. Let's move on to CSI Solar. CSI Solar is their global manufacturing arm, which is traded at Shanghai Stock Exchange at a $7 billion valuation, and which Canadian Solar owns 64% of it. Here we mentioned Canadian Solar owns 64% of CSI Solar and e-Storage. They own 2.4 billion shares of CSI Solar, which are currently trading at around 13 and change Chinese RMB per share. This gives Canadian Solar's equity ownership a value of $4.5 billion, or around $60 per share. In UBS sell-side research, they mentioned that their Chinese equity team valued Canadian Solar's ownership of CSI at $116 per share, but then they applied a 90% discount. And here is the snippet, the screenshot of all the ownership that Canadian Solar owns from CSI Solar, 2.4 billion shares, and the lockup period. They did their IPO on June 9th of 2023, and they have a 3-year lockup period which ends on June 9th of 2026, so this year. So after June 9th, Canadian Solar should be able to take advantage, at least to some extent, maybe not fully, because selling these shares in the China market is not as easy as it sounds, but at least to some extent they should be able to take advantage of this significant gap in the value of their Chinese shares and the value of the American holdco company in CSIQ. CSI Solar is a top 5 global solar producer in the world. They were the second most profitable solar manufacturer company in the world after First Solar, at least in the top players. From the top players producing solar panels, Canadian Solar is the second most profitable one after First Solar. every other Chinese or global solar panel manufacturer is deeply in the red, while CSI Solar is the only one that has been able to be consistently profitable for the last decade. During its history, Canadian Solar has delivered over 170 gigawatts. This is over 5% of the global deployments, and they are expected to deliver between 25 and 30 gigawatts in 2025 and 2026. Again, a 5% market share based on estimates of global deployments. Moreover, they had reached between 8 and 9% market share in 2021 and 2022, and this market share has decreased, which is a good thing because it shows that they were better at capital allocation decisions. The whole industry went into overproduction, it went into overcapacity and overinvesting, and Canadian Solar was the only diligent one who said, hey, we're going to expand production way less than our competitors because you're not making rational capital deployments. Moreover, they're also a leader in battery energy storage, having delivered over 16 gigawatts of battery energy storage, actually 18 if we take into account last quarter. They're responsible for 5% of all solar panels deployments in the world, but if we take China out of the equation, whole world ex-China, they're responsible for over 10% of all those solar deployments. And if we take into consideration only the US, they are responsible for 15% of all the solar panels deployed in the United States. Here you can see the breakdown of their 170 gigawatts worldwide shipments, and you can see that the 22% of those have been delivered to the United States, so around 40 gigawatts to the United States. Moreover, in 2025, the US added 43 gigawatts, and Canadian Solar, just in 2025, was responsible for delivering 8.1 gigawatts to the US, making their market share 18.8%. They're a huge, huge leader in solar panels in the US, worldwide, but particularly in the US. These numbers are huge. This is a screenshot from the latest earnings call, where they show in the US markets, we delivered a record 8.1 gigawatts to the United States. In energy storage, the volatile tariff environment shifted some shipments volume into the United States. Even so, we ended the year with a record 7.8 gigawatt hours of global shipments, including 3.9 gigawatt hours delivered to the United States, 3.1 gigawatt hours of storage delivered to the United States, and 8.1 gigawatts of solar delivered to the United States. They're a leader by far on both solar panels and battery energy storage worldwide, and particularly in the United States. They've been recognized as the number 2 and number 3 solar module producer worldwide. Here, Canadian Solar ranked third with a score of 90.4, even ahead of Jinko Solar, even ahead of Longi, Astro Energy, Adani, and Qcells. And here, based on Wood Mackenzie's global solar module ranking, they were ranked number 2. So they are a high quality, high reliability, worldwide recognized brand for both solar panels and battery storage. They boast the highest raw efficiency in the industry. This was done by a YouTuber. I don't know how high fidelity this is, but they boast the highest raw efficiency compared to Qcells, Silflab, Trina, Dono, and Recla Alpha. They boast the highest raw efficiency for their solar panels. And as I mentioned, they're the only producer that never had a net loss in the last year. Here, First Solar is clearly ranked as the most profitable solar panel manufacturer in the world, and Canadian Solar is the second to that. Then Jinko Solar, Trina Solar, and else are losing around $1 billion each per year. If we measure it in revenues, CSI Solar ranks 7th, even ahead of First Solar, and with less revenues than Jinko Solar, Tongwei, and Trina, because they clearly overinvested in capacity and are now having severe losses because of their overcapacity problem. This is the ranking of the largest solar module manufacturers in the world, where Jinko ranks first, Longi second, Trina third. Canadian Solar is 8th in this ranking, but is clearly the most profitable one of them all, excluding First Solar. Moreover, it shouldn't be surprising. They had 18.8% market share in solar panels for the US during the last year. They already have existing partnership with both Amazon and Microsoft. This is from their investor presentation, where they boast partnership with credit-worthy off-takers, including Amazon, Microsoft, APS, etc. and they have demonstrated their ability to secure competitive financing terms across varying structures of tax equity and project financing to fuel strategic growth. They expect to have safe harbored over 3 gigawatts of solar and over 7 gigawatt hours of BESS by the summer of 2026. So clearly, the sheer size of this company is mind-boggling. This is the technology timeline of Canadian Solar. They've been a leader on technology advancements, going from their CS5 and CS6 products, then to their Q, then to their BHQ, and now to their TOPCon solar panels. Moreover, there are multiple dimensions where Canadian Solar has demonstrated to be a first mover. Among them, their endeavor to get to zero silver in their panels. Next quarter, silver usage is expected to drop 70%, from 100% to 30%. Here is the screenshot of the chairman talking about reducing silver reliance on their solar panels. And here is the screenshot of Dr. Sean Koo, the chairman and CEO, talking about how HJT, the newer and most efficient technology in the world, is leading, generating 1.2 more energy per watt than TOPCon and 1.9 more energy per watt than BCs. And why do I mention this? Because Canadian Solar's solar cell facility in Indiana, the only operating cell facility for N-type solar panels, will be producing HJT solar panels and not TOPCon, HJT. As we can see here, the modern technology pricing history, HJT commands a significant premium over TOPCon and PERC solar panels, with them varying around just shy of 30 cents per watt, while HJT is almost reaching 40 cents per watt. This is the screenshot of the transcript of their Q4 earnings call, where they say, in response to strong customer demand, we're expanding our initial nameplate capacity beyond the original planned 5 gigawatts peak as we install and commission additional production lines through 2026. They expect to end 2026 with a 10 gigawatt production capacity for their solar modules, and for their solar cells, the phase 1 will have a nameplate capacity of 2.1 gigawatt peak and will use state-of-the-art heterojunction technology, or HJT. This phase 1 will represent the only commercially operational HJT solar cell facility in the United States. And then with phase 2, which is expected to be during the second half of the year, their nameplate cell capacity should reach 6.3 gigawatts peak. So they are by far the first mover in multiple endeavors, among them lowering their reliance on silver in their panels and on implementing the most efficient and newer technologies such as HJT in their US operations. This is a timeline showing their innovation leadership and how, in 2022, for example, they commissioned a 1.4 gigawatt-hour Crimson project in the US, which was the world's largest energy storage project that is connected to the grid. In 2023, they announced their plans for a 5 gigawatt module facility and a 5 gigawatt cell facility. So this is not something that came out of the blue in 2025 or early 2026. They've been planning this since 2023, and they're by far the first mover in their endeavors. And in 2024, they announced their strategic decision to onshore battery energy storage production in the US with a 6 gigawatt-hour factory plan announced in Kentucky. And also in 2024, they received a $500 million investment from BlackRock into Recurrent Energy. Moreover, in 2021, they invested in Habitat Energy, which is a company where Adam Levy works at. I met the guy through a Zoom call. I deeply, deeply respect him. They do AI-driven energy software trading for battery energy storage, which shows how ahead of the market they are. Habitat Energy is thriving, and hopefully Canadian Solar's investment in them will be profitable as well. But particularly, what the most important thing here is that they're using the most sophisticated software out there to manage their battery solutions. In the last 7 years, CSI Solar has spent over $4 billion in CapEx. So again, remember, CSI Solar is worth $7 billion. Canadian Solar owns 64% of it, and they are only worth $1.2 billion in equity value, which is incredibly, incredibly undervalued. In Q3 of 2025, they delivered 5.1 gigawatts worldwide, and 44% of those deliveries were to the US. They delivered 2.25 gigawatts of solar modules to the US alone in a single quarter. And here they showed their strong customer relationships with the biggest energy companies in the world, including EDF, EDP, Total Energies, Avangrid, Lightsource BP, I mean, they have their hands in multiple cookie jars at the same time, and they're a clear Western leader in renewable energy. And here they show their manufacturing capacity for every layer of the supply chain, spanning from modules, cells, wafers, and ingots. They're not just a module producer, they're not just a cell producer, they also produce their own wafers and their own ingots, which is a significant competitive advantage going forward. When analyzing Canadian Solar, this is a screenshot from their earnings, from their annual report, we need to take into consideration that because of the consolidation of their CSI business and the Recurrent Energy business, because in both of these businesses they own over 50%, the SEC mandates that the margin that you have on those businesses need to be eliminated. So for example, in 2024, they had to eliminate $790 million of revenues. Why? Because their manufacturing segment sold $800 million of equipment to Recurrent Energy, and they had to eliminate that. They had to eliminate the same thing for cost of revenues and the same thing for gross profits. So, as an investor, how could we see this margin materialize? Well, when Recurrent Energy sells a project, this margin materializes for Canadian Solar as well. But if Recurrent Energy decides to own the project and operate the project, you won't realize this margin, at least on accounting terms, in the short term, but you will realize them on the long term as you sell electricity to the grid. But these energy assets last for over 20 years. So realization of these margins probably takes time. If you're a fundamental investor and understand the dynamics of this thing, it's not worrisome, but on a simple look, it might make these numbers appear less attractive than what they actually really are. If you take into consideration the margin elimination of sales to Recurrent Energy, these margins are over $444 million in margin, and it has a similar margin profile. I mean, CSI Solar sales to Recurrent Energy, it has a similar margin profile of that of First Solar. Why? Because most of those sales are in the US, and the US solar segment is highly profitable. Moreover, CSI Solar has repurchased 1.2% of their shares in 2025, which shows that the company, even at a $7 billion valuation, they do not think they are overvalued. I mean, it's not a crazy valuation given the sheer size of their operations. Moving on to project demand of CSI Solar. So how much project demand they are? A lot. I mean, they are 18.8% of the market share in 2025. As I mentioned, they have over 15% of market share in the US, so no wonders that they have some huge projects. For example, the largest New York solar project uses Canadian Solar. This was a project that cost almost $1 billion. It was for 500 megawatts of photovoltaic power, and it uses nearly 1 million of Canadian Solar modules on steel racks. Then, Duke Energy, one of the largest utilities, they are a buyer of US-made Canadian solar panels. Let's take a second to read what they're saying. And this reporter was saying, I was curious whether their US solar panels were made in China. And the answer is an emphatic no. They are manufactured by Arizona-based First Solar and by Canadian Solar, which means they originate from the land of Mounties, Meuse, and Molson Beer. So clearly, Duke Energy is another buyer of Canadian Solar, and they see them as a US-made panel. NextEra also is a huge buyer of Canadian Solar, and we can see them in this case where NextEra is a defendant alongside Canadian Solar because they were a heavy purchaser of this equipment. Moreover, Total Energies and Google, they're also using Canadian Solar. Here we have the deal where Total Energies agreed to provide 1 gigawatt of solar capacity power to Google's data center in Texas. This was made public in February 9th of 2026, and here you can see that Total Energies is a heavy buyer of Canadian Solar's modules, with 135,000 modules being deployed in their systems. Then you got Stewart Creek, which is 1.5 gigawatt solar project. It is expected to begin construction in 2027 and achieve commercial operation in 2029. And if you go into the filings of these projects, which are public, they mention the specifics of Canadian Solar's equipment in their BESS solar modules. Then you got Sunriser Renewables LLC, which is a Crayhill portfolio company. Crayhill manages hundreds of billions in dollars in AUM, where they have a 2 gigawatt agreement in December of 2024 to use Canadian Solar's tech for gigawatt level US renewables pipeline. Again, they have a huge list of very, very big clients. Moreover, Sunrayzer became a repeat customer, not only buying their solar panels, but also signing an agreement for an extra half a gigawatt of their storage technology. Here's the Canadian Solar secures 503 megawatt hour Texas storage order from Sunrayzer, and this was signed in February 5th of 2026, just a couple of weeks ago. Again, the stock didn't react at all, but the sheer size of the things that are signing is huge. With this last example, let's move on now into their e-storage and their battery energy storage segment. Storage. Storage currently represents the profitable growth engine for Canadian Solar. In Q3 of 2025, they shipped 7.8 gigawatts for full year of 2025, representing $1.4 billion in revenue. They're expecting to ship around 14 to 17 gigawatt hours in 2026, and they currently have 15 gigawatt hours of BESS capacity and 3 gigawatt hours of battery cell capacity at the end of 2025, and they expect to expand this capacity to 24 gigawatt hours and 9 gigawatt hours for battery energy storage systems and battery cells respectively. Moreover, they have a contracted backlog of $3.6 billion, huge, and they have operating projects contracted under long-term service agreements spanning 29 gigawatt hours, which is huge. How are they able to achieve all these numbers? It's because they were an early mover in battery energy storage. In 2021, they accounted for 10% of the whole market share in the US. How? Because they delivered over 1 gigawatt hour of battery storage projects in the US in 2021. So 5 years ago, they were already delivering what EOS Energy is hoping to deliver this year. I'm a huge bull on EOS Energy, but the sheer size of Canadian Solar is mind-boggling. They are even increasing their market share worldwide. In 2024, they had a 1.81% market share. Then in 2025, they had a 2.5% market share. The world added 315 gigawatt hours of globally deployed, and they deployed 7.8 gigawatt hours of that global market, representing 2.5%. And they expect in 2026 to more than double that production and to deliver around 5 gigawatt hours just for the USA. This was in their investor presentation, where they expect to deliver to the USA around 5 gigawatt hours for 2026. And the USA is expected to add around 70 gigawatts this year, representing around 8% of the market share in the US. Let's take a moment to appreciate how this business expanded on its size incredibly fast. In March of 2025, their operating projects contracted under long-term service agreements were 5 gigawatt hours. On the same date, 1 year later, they were 29 gigawatt hours, almost a 6x. They added 24 gigawatt hours of long-term service agreements in one single year. This is an incredibly rapidly growing business unit, and it's the most profitable one for Canadian Solar as well. And they not only do utility scale battery energy storage, but they also do residential energy storage, and they are one of the leaders here too. It's already profitable. This is from their Q3 earnings call, where they say, notably, the residential storage segment is gaining momentum and has turned profitable this year. Whoa. And not only that, but they already have a partnership with D.R. Horton. D.R. Horton is the largest home builder in the US. D.R. Horton is a $43 billion company, and they have a partnership with Canadian Solar to deploy their EP Cube, which is the residential solution, alongside their buildings. Whoa, not only utility scale storage, but also a leader in residential energy storage, which would make them a competitor against Enphase, for example, and they're already profitable. Not only they have a partnership with D.R. Horton, they also have additional partnerships, for example, this one with Lifestyle Solar. And not only they have utility scale and residential storage, but they also are a leader in commercial and industrial solutions as well. Their solution here is called QBank, and it's a 180 kilowatt hour solution per this smaller container, which is perfectly sized for commercial and industrial, and they are gaining momentum here as well. As I mentioned, Canadian Solar has ambitions to have their own factory in the US, particularly in Kentucky, and this factory used to belong to Enervenue. Enervenue then went bankrupt, and Canadian Solar acquired this company, making this project a brownfield, which would mean it's faster, and it's expected to cost around $712 million. And adding to this huge list of solutions that Canadian Solar has self-developed, they also self-developed their electronics and inverters. In 2023, annual shipment volumes of electronics and inverters exceeded 1 gigawatt in 2023, and since then they continue to offer these solutions. This is an example of their inverter for utility applications of 350 kilovolts. So not only leader in solar panels, not only leader in utility scale storage, not only leader in residential storage, not only a leader in commercial and industrial storage, but also in electronics and inverters. Again, they have their hands on multiple cookie jars. Let's take a second to appreciate the project demand for their battery energy storage solutions, where the numbers are staggering. Look at these dates and the size of these numbers. First of all, they won a 2.5 gigawatt hour order for a data center. This was on March 17th of 2025. They entered into a supply agreement for a 2.5 gigawatt hour battery energy storage system supporting data center grid infrastructure and resilience. Then you have on March 31st, so 2 weeks later, they announced an additional 420 megawatt hour order to Drax. Then on December 18th, they announced a 408 megawatt hour for Bena Energy Storage in South Australia. Then in November 17th of 2025, they announced a 1.8 gigawatt hour for I think this one was Ontario, and multiple others. As an EOS investors, you might be acquainted with the New York's NYSERDA bulk storage project. Well, IPA Power, which is a Blackstone-backed company, they have 2.4 gigawatt hours of projects in this bulk storage program using Canadian Solar's solution. This is a 300 megawatt with a 4-hour duration, and this is another 300 megawatt with a 4-hour duration, both of them using the e-storage Canadian Solar solution. And this is not even a firm order, and they're not even talking about it, because on their numbers, this is not that meaningful, but it's huge nonetheless. They have already a firm order for a 1.8 gigawatt hour project in Ontario, and additional to that, they have already a 1.8 gigawatt hour firm order from IPA Power, the Blackstone-backed company, to be deployed in key US markets. This news was issued in March 6th, and this news was, late 2025. Just to show an example, Fluence, a competitor in the battery energy storage space, it added $500 million in their market cap, around 40% of the whole Canadian Solar, on a 1.2 gigawatt hour order on January 15th. Canadian Solar here issued a 2.5 gigawatt hour order for data centers, and it barely moved. And here Fluence added $500 million in market cap just from a 1.2 gigawatt hour order, which Canadian Solar has many of this. Let's compare Fluence against Canadian Solar. Historically, Fluence has deployed 18 gigawatt hours since inception. How many did Canadian Solar do? 18 gigawatt hours as well. How many did they do in the last 12 months? 4.2 gigawatt hours. How many did Canadian Solar did? 8 gigawatt hours, or 7.8 gigawatt hours. And the main thing to take away here is Fluence is reliant on ASC technology. They are an integrator. They basically have non-existent vertical integration, and they don't have any manufacturing expertise at all. On the other hand, Canadian Solar has a self-developed technology. They used to use CATL cells, but now they use their own cells, and they have a huge manufacturing expertise and a significant vertical integration as well. Here is just to show an example where Fluence is valued at 8 times book value, where Canadian Solar is valued at 0.3 times book value, and they're worth 2 times their asset base. So significant disparity in equity valuations between Fluence and Canadian Solar. And Canadian Solar has multiple business units. We're just measuring their storage business, where I think it should be worth significantly more than Fluence. Again, one of the reasons I believe it should be worth more is because Fluence is structurally disadvantaged. Why? Because their business plan includes manufacturing cells in Tennessee, then manufacturing the modules in Utah, then doing the enclosure in Arizona, moving multiple thousands of miles of equipment and raw materials from one side to the other to finally get to their final product. I mean, Canadian Solar's plan is to do all this in a single factory. And at the same time, their solution is still FEOC compliant because they are importing from FEOC compliant countries. As you might know already, Fluence gross profit is very insignificant, around 13% gross profit, because they are an integrator, because they don't have vertical integration, because they don't have manufacturing expertise. Their value proposition is significantly lower than its competitors. Here we've got Fluence's cumulative deployments table, where they showcase that by end of 2025 they had deployed around 17.8 gigawatts hours of storage. And here, this stat comes from their website, where they showcase 46 gigawatt hours of energy storage. I don't know what they mean by this. My belief is that it has to be energy dispatched by their battery systems. If that's the case, it would be less than 3 times their cumulative deployments. And if we compare that to Canadian Solar's, they do not disclose this number, but I imagine that it's way higher than Fluence's number, particularly since they already have a 1.4 gigawatt hour project from Crimson in California operating daily since 2021. So if this is what I imagine, again, Canadian Solar's numbers vastly outperform Fluence's numbers. So to conclude, Canadian Solar, CSIQ storage subsidiary, should be worth more than Fluence's whole market cap, in my opinion. And currently, Fluence is trading at a 2.8 billion equity valuation, while Canadian Solar is trading at a 900 million equity value. If we take into account the fully diluted share count, it would be 1.2 billion. Still less than 2 times Fluence Energy, with significant more assets, significant more value, significant more mature businesses within it, and trading at less than half Fluence's energy market cap. Simply mind-boggling. Let's now move on to Recurrent Energy, their project development arm. Let's start by listening to Jan Swan, which used to be Canadian Solar's president in 2024.
Model and our product. Yeah, good. But you were also one of the first of the big companies who went really into the development when you took over Recurrent, which is now your development arm. So how much is this helping you?
Well, 9 years ago, we acquired Recurrent from Sharp. And at that time, everybody was spending money on expanding their capacity on mono. And we were the only ones spending $360 million acquiring Recurrent, entering into project development business. That strategically sets foundation for the company to be positioned as a global, leading development company, right? Project development company. That really helped the company to understand the end market better than our competition, and also helping us to take better control on the demand side. It basically is kind of an incubator for a lot of the innovations on our manufacturing side, such as the storage, the utility storage, right? So tremendous helping us. And actually, the industry is in the transition process right now. It looks like all the costs are coming down. This probably going to last for many months. However, mid to long term, we're seeing continuous energy shortage and appreciation of renewable asset. So this is actually a very good time for us to expand our business in development. And we're actually transitioning our development business into more of a project owning and operation company. So as you have observed, we have recently absorbed an investment, with BlackRock of $500 million at a post valuation of $2.5 billion. And we also are securing loans in different regions, and particularly in Europe, we just secured a bank loan of $1.3 billion US dollar. So that will help us to expand our IPP business. Of course, we're going to start from owning partially on the project, and then gradually increased our ownership on each of the projects. That covers US, Europe, UK, Japan, and I think Australia as well. Yeah.
Okay.
No, sorry, not Australia. Europe, US, Europe, UK, and Japan.
Okay, I think that's an interesting strategy. So let's.
Okay, so the main takeaways here are that first, Recurrent Energy has served as an incubator for Canadian Solar. As he mentioned, battery energy storage was a technology that Canadian Solar was able to be a first mover because of Recurrent Energy. They were able to deploy these assets on the field before anyone else in the industry because they had the development expertise and know-how. So let's take a quick second to go over Recurrent Energy's timeline. In 2009, Canadian Solar Solutions was incorporated. It was the first innings of their project development arm. In 2010, they began developing the utility scale projects around 200 megawatts in Ontario. In 2013, they did the first portfolio monetization with sales of 6 megawatts, 20 megawatts to BlackRock, and 49 megawatts to Concord. Then in late 2013, Canadian Solar begins construction of 134 megawatts for a grand renewable solar project. During these years, 134 megawatts was a huge scale in solar projects. In late 2014, Canadian Solar won another 114 megawatt hours for the project in Brazil. So they've been a first mover in the US, in Europe, and also in Latin America. By 2014, they had approximately 1.5 gigawatts already developed, built, and connected of solar projects. In 2015, they signed a definite agreement to acquire 100% of Recurrent Energy from Sharp for $265 million in cash. Then this grand renewable solar project reached COD, the one in Brazil, in early 2015. By late 2015, they had a partnership with Southern Power for 212 megawatts in Texas, again, a significant project by this time. By 2016, almost 1.2 gigawatts of solar projects had reached COD only in the US, again, very significant scale. In December of 2018, they had a record energy segment revenue of $1.5 billion for 2018 in Recurrent Energy alone. Significant size. And then in 2021, they announced a 2.9 gigawatt hours of storage projects. Crimson Phase 1 was 800 megawatt hours, Crimson Phase 2 was 600 megawatt hours, Tranquility was 288 megawatt hours, Garland was 352 megawatt hours, Slade was 561 megawatt hours, and Mustang was another 300 megawatt hours. So huge scale even as early as 2021 in energy storage project development. Moving on 2023, the global energy segment was rebranded as Recurrent Energy. Again, in 2023, they announced the Papago storage project in Arizona for 1.2 gigawatt hours. In January of 2024, the BlackRock investment was announced for $500 million and a 20% equity stake post-conversion. In June of 2024, the Papago storage, this 1.2 gigawatt hours, secured financing for $513 million. In October of 2024, this BlackRock commitment was realized. In April of 2025, they secured an additional $400 million multi-currency corporate credit facility with a consortium of banks, including Santander, Rabobank, Intesa, Morgan Stanley, and many others. This multi-currency loan allows them to deploy projects in multiple areas of the European Union. In July 2025, the Papago storage project for 1.2 gigawatt hours reached COD. In September of 2025, they had developed over 12 gigawatts of solar and 6 gigawatt hours of storage, developed across 6 different continents and with over 13 gigawatts under OEM contracts. Then in December 2025, their UK project achieved DCO, which was granted for 800 megawatts of solar and 1 gigawatt hour of storage. And in February of 2026, Canadian Solar has developed, built, and connected over 15.7 gigawatts of solar power and over 6 gigawatt hours of energy storage projects. This is the evolution of how many megawatt hours of storage, of solar and storage they were able to deploy. And this is the evolution of the share price, which clearly didn't evolve as the underlying business did, not considering also the manufacturing business and their US manufacturing business as well. Recurrent Energy is a top dog in energy development. This was the ranking of the global 15 OEM vendors by gigawatts under service in 2023 versus 2022. Recurrent Energy ranked 7th in this ranking with 7.5 gigawatts under OEM services, even ahead of huge monsters in this industry such as EDF, Renewables, ENGIE, and many others. And this is a video that clearly shows the quality and the essence of Recurrent Energy. Hope you appreciate it. The scale, the volume, the recognition as a global leading provider of project development and operations and maintenance of Recurrent Energy is incredibly impressive. We need to acknowledge that Recurrent Energy has served as an incubator also for top talent across the renewable energy industry. As an example, Primergy's CEO, Primergy is one of the largest renewable developers in the world, used to be the VP of Recurrent Energy as well. And to mention some high-quality partners from Recurrent Energy and buyers, Clearway, which is an $8 billion renewable developer in the United States, has bought projects from Recurrent Energy in the past. Recurrent Energy, as mentioned before, has a partnership with Habitat Energy. I highlight Adam Levy. I highly recommend a follow if you want to have insights in the renewable energy industry by one of its most knowledgeable insiders. Here they highlight in early 2021 how they did a strategic partnership and investment in Habitat Energy to strengthen battery storage capabilities. And as mentioned before, Recurrent Energy has transitioned after BlackRock's $500 million investment from a develop and flip model to a develop and operate. In this time frame, they were able to 6x their electricity revenues in 5 years. In 2021, the electricity revenue from their operating portfolio was $24 million. By the end of 2025, the same line segment, revenue from electricity, battery storage operations, and others, was over $140 million in revenue. This is significant scale and is increasing rapidly. And as we can see, it jumped a little bit from 2022 to 2023, but the biggest jump was from 2024 and 2025 after BlackRock's investment, because they flipped from they switched from a develop and flip model to a develop and operate model, increasing from 46 million to 91 million to 142 million just in 3 years. Just to take into account, $142 million just from electricity sales is larger than EOS's whole revenue in 2025, and this is high margin revenue. I mean, the scale of this business is very impressive. To take into account, asset sales from the develop and flip model used to represent 94.4% of the revenues in 2021, and they represented under 45% in 2025. This showcases this transition from developer to operator, but I think one has to expect this number to go upwards since they have clearly guided to transition again to start selling more projects in order to recycle cash. They're a global developer for sure, but they have a significant focus on the US market with over 5.7 gigawatts of solar and 4.4 gigawatt hours of BESS developed in the United States alone. And as I mentioned, they have huge pipelines with over 25 gigawatts of solar and 81 gigawatt hours of storage across different stages in these projects, going from under construction to backlog to advanced pipeline and early stage pipeline. And most importantly, they have over 7 gigawatts with already interconnection agreements for solar and over 15 gigawatt hours of storage with already interconnection agreements. This has significant value for a private buyer that these kind of transactions are happening across the board. And these already agreed interconnection points for both solar and storage represent significant buyer for a private buyer. Let's try to walk through Recurrent Energy latest progress. As I mentioned, 800 megawatts of solar PV and 1 gigawatt hour of battery storage in the UK. They achieved $825 million in project financing for their Arizona project. They secured an additional $513 million in financing for their BESS project in Arizona. They energized this Arizona project during the summer of 2025. They won a 1.8 gigawatt hour energy storage project and 150 megawatts of solar capacity to Arizona as on top of these 1.2 gigawatt hours. They secured $260 million in financing in mid-2025, and additional to that, they secured $415 million in corporate debt financing during early 2025. Then on mid-2024, they were able to secure a multi-currency financing agreement for up to 1.3 billion euros to accelerate European renewable energy portfolio. This is a multi-currency financing in order to enable them to deploy multiple projects across different geographies in the European Union. Moreover, they also were able to secure 110 million euros in another multi-currency green loan facility from Investec Energy Infrastructure and Infrastructure Finance in the UK. In the USA, they were able to successfully commission a 127 megawatt-hour solar project in Louisiana in mid-2025, and they were able to secure an additional $183 million in project financing and tax equity for the merchant storage project in Texas. If I'm not mistaken, this should be the Fort Duquesne project in Texas. So Recurrent Energy's expertise is not only on project development, but also in project financing and tax equity financing, which is not as easy as it sounds. And they clearly have a track record of successfully doing all these different tasks across the whole value chain of project development. Moving on, we also have a 300 megawatt power purchase agreement with a major US tech company in Spain, and they successfully brought into operation 134 megawatt hours of solar project in October of 2024. As mentioned previously, we are already aware of the NYSERDA bulk storage program. We mentioned IPA's 2.4 gigawatt hours within this program, but Recurrent Energy as a standalone company also has almost 1 gigawatt hour of self-owned projects for the NYSERDA program, spanning both from 8 hours and 4-hour durations. As was mentioned by the president of Canadian Solar in the latest video, Recurrent Energy served as an incubator for the manufacturer arm as well. And here they are able to use Recurrent Energy in order to demonstrate the 8-hour duration capacity of their battery storage solutions as well, alongside the standard 4-hour durations also in the NYSERDA program. In 2021, they set out their targets for Recurrent Energy, which were vastly exceeded. The operational OEM projects around 11 gigawatt hours, this was vastly exceeded as well. Cumulative retained projects were around 1 gigawatt. They have over 2 gigawatts of solar and over 2 gigawatt hours of storage retained within Recurrent Energy. And the annual project sales are probably falling short because of their switch to develop and own instead of develop and sell. Great. Let's now talk about Recurrent Energy's capital structure. We can know these numbers with precision because Canadian Solar basically consolidates two balance sheets: CSI Solar, which is a public listed company in Shanghai, and Recurrent Energy, which is consolidated in Canadian Solar's financials. So by removing CSI's numbers from Canadian Solar's numbers, we arrive at Recurrent Energy's capital structure. By doing this, we find out that Recurrent Energy's total assets has grown from 2.1 billion in 2022 to 5.5 billion in 2025, and their total liabilities has grown from 1.5 billion in 2022 to 4.8 billion in 2025. What we see here is that the shareholders' equity has grown from 620 million to 700 million in 2025. However, within these total liabilities, BlackRock's investment is embedded in their total liabilities because it was done through a convertible note. We can assume this could be treated as shareholder equity. So if we take this into consideration, the total shareholders' equity for Recurrent Energy would be 1.2 billion, and total liabilities would be 4.2 billion. We can see that when BlackRock invested in Recurrent Energy, their valuation consisted basically in a 2x book value post-money valuation. Just to give a quick example of how this was done, you can see the whole Canadian Solar's consolidated numbers. This is public information, and you can see CSI's consolidated numbers from their published financials in the Shanghai Stock Exchange. And then by doing Canadian Solar's numbers minus CSI Solar numbers, we arrive at Recurrent Energy's numbers. This is their balance sheet, basically, and this is their operating numbers, where we can see that their operating profit used to be around $60 and $70 million, and it has turned negative in the last 2 years. This is because they shifted from a develop and sell model to a develop and own model, and in the short term, you incur losses that are accounting losses. They might be real losses, but you're investing in the future by owning assets that will be operational for 20 years. Just to give a quick example, my assumption is that Recurrent Energy will be generating around mid-teens IRRs, probably levered IRRs, which would justify a 2x book value valuation. This is my conclusion, basically. Recurrent Energy, I'm valuing at a 2.5 billion equity value. This is the same equity value that BlackRock invested in early 2024. Since then, their owned assets have grown from 1 billion to 2+ billion, and their assets under development has also grown from 860 million to over 2 billion in these last 2 years. And these assets under development, they are carried out at cost and may be revalued upwards on completion. So there's significant upside potential. On a fully converted basis, their book value rises from 700 million to 1.2 billion, and applying a 2x book value suggests a meaningful valuation support of 2.5 billion, which is exactly the same one that BlackRock invested at. Moreover, Recurrent Energy's long-term contracted asset could generate over $500 million in EBITDA if we take into consideration that they have over $5 billion in assets, and if we believe they're able to do mid-teens IRRs, suggesting a $500 million per year in EBITDA would not be out of the question, and applying an 11x enterprise value to EBITDA multiple with $3 billion in net debt, you get an implied equity value of $2.5 billion. So it's the same outcome, just with a different methodology to get there. It's important to mention that an additional upside comes from a massive pipeline of 24 gigawatt-hours of solar and 83 gigawatt-hours of storage, which could represent roughly 50 billion of potential future project assets. This huge pipeline that they have, it does have a lot of value. Maybe not to the public markets right now because they're not able to see it, but for a private buyer, it would imply a lot of value, especially in this imbalance between demand and supply for electricity, which this huge pipeline could help mitigate, at least partially. Recurrent upside optionality pipeline valuation. This is a work done with Claude Opus. Basically by taking into account their huge pipeline and saying, hey, what are the market valuations for this type of projects depending on their size and their maturity, if they're under construction or their backlog or their advanced pipeline or early stage. And this is what Claude comes up with. Hey, if it's early development, you will be paying between $50 and $200 million per gigawatt. And if it's already operating, you will be paying upwards of $1 billion. So taking into account the huge discount depending on the maturity of the project, you arrive at a valuation of a base case of $6 billion, a low case, a bear case of $2.6 billion, and a bull case of $10 billion. I'm not taking into account into my base case scenario. My base case scenario is under capacity to generate EBITDA under current book value, but this does represent a significant upside potential that should be taken into account in my personal opinion, and I do use these estimates for my bull case value as well. Let's now move on to their US manufacturing, one of the biggest upside potential in Canadian solar. First of all, we need to understand the different solar technologies out there. Solar panels are a commodity. We already covered that. However, the way we produce these solar panels and the way we produce this solar electricity will depend on the type of technology that is used. And this technology has evolved over time. Particularly in the previous years, PERC technology was used to dominate. Then TOPCon started dominating. And then my belief is that HJT will be the predominant technology going forward. I could be wrong about that. That doesn't materially change my base case scenario, but it's something that we need to take into account. Basically, TOPCon has emerged as the dominant technology today, primarily because it can be deployed as an incremental upgrade to PERC manufacturing lines. So we already had a huge established manufacturing capacity for PERC technologies, and then TOPCon came and it implied modest capex upgrades to already existing PERC manufacturing lines. However, HJT represents a more advanced but capital-intensive technology leap. So my belief is that TOPCon wins on the near term because of cost and scalability, while HJT leads on the long-term economics and efficiency. TOPCon captures the near-term growth globally, but HJT represents the end game for the US. Why? Because the US does not have already established PERC and TOPCon manufacturing lines. This is especially relevant for the US, where there is no legacy base for PERC or TOPCon cell manufacturing upgrades. So the rational long-term decision for the US is to invest directly in HJT and take the technological leap. And this is exactly what Canadian Solar is doing. As we already covered, HJT commands a pricing premium because of their higher efficiency. It is more expensive to manufacture, particularly due to their high capex, but if you're gonna do things for the first time and you're deciding whether to use a TOPCon manufacturing line or an HJT manufacturing line, HJT, in my mind, represents the more rational decision. Canadian Solar's US manufacturing operations has rebranded to CS PowerTech, and they're a key player in the US market. What's the structure of their US manufacturing business? Well, it's basically a joint venture between Canadian Solar and CSI Solar. Canadian Solar owning 71.1%, while the other 24.9% is owned by CSI Solar. This is to be above the thresholds imposed by the OBBA and the FIOC compliance rules. The whole ownership, taking into account their 64% ownership of this 24.9%, represents roughly 91%. The goal for this is to resume direct oversight of their US operations and continue reshoring manufacturing to North America and build a more resilient, transparent, and diversified domestic supply chain. CS PowerTech, their US manufacturing business, separates the US business under the parent company, while CSI Solar remains focused on the new non-US markets. This is just a couple of news where they announced that Canadian Solar has restructured the ownership to bring all US efforts under one umbrella. And this is the press release they issued on December 1st, where they announced the structure that they would be using going forward, holding a controlling 75.1% in the US. I need to be honest with you, after this news, I was a heavy buyer of Canadian Solar. If we go to the stock price on that date, this was December 1st, Canadian Solar was trading at $27 per share. This was around $2.5 billion valuation, and when I saw this news, I said, hey, this company is extremely cheap. Since then, Canadian Solar lost half its equity value, but their business has progressed incredibly nicely. Just to mention that at $27 per share with this news, I was a heavy buyer, showing my conviction and how cheap this company is. Let's now dive deeper into the domestic content FIOC compliance rules and prohibited foreign entity conditions in order to access the US market. This is a screenshot from the legislation that was published on February of this year. It basically includes two categories of entities, a foreign influence entity and effective control. It has two main points, ownership and control. Within ownership, a specified foreign entity cannot own more than 25% of such entity, or more than one entity, so two or more, cannot own over 40% of such entity. Moreover, these foreign specified entities cannot own 15% or more of the debt of that company. So you need to comply with those rules in order not to be categorized as a prohibited foreign entity. There's the effective control category, which effective control is described as unrestricted contractual right of a contractual counterparty which determines the quantity or the timing of production. So a foreign specified entity cannot determine the quantity or the timing of that production. It needs to be fully owned and controlled by a US entity. This control is described as not being able to determine which entity may purchase or use the output of a production, or determining which entity may purchase or use the output of a qualified facility, or restrict access to data critical to production or storage of energy. Another key point to have into consideration when determining effective control is that a PFE cannot, on an exclusive basis, maintain, repair, or operate any plant or equipment which is necessary to the production by the taxpayer of eligible components or electricity. So basically what it says here is that CSI, or a foreign control entity, cannot have more than 25% of the ownership, cannot have more than 15% of the debt, and cannot have control based on which is the output, which is the timing, and determining who and when the manufacturing lines are maintained, repaired, or operating. And Canadian Solar has structured their deals exactly to comply with all of this. Here we have a short summary of how Canadian Solar has structured this with their Mesquite, their module facility, and with their Jefferson, their solar cell facility, where they place maintenance and repair responsibility on US operating lessee, so Canadian Solar or CS Power Tech, and not on CSI Solar, so not the lessor. And assigning those rights to the US lessee supports the view that the lessor does not exercise effective control. So clearly, the Canadian Solar has structured this for them to easily comply with effective ownership and effective control. And the way this is calculated is based on the total quantity of the electric component divided by the total quantity that was not produced by a PFE. And these thresholds needs to be above 50%. The biggest takeaways from the published guidelines on February of 2026 was that in order to be eligible for 45X manufacturing tax credits, the modules or the electric equipments need to have an MACR, a material assistance cost ratio, of above 50%. This ratio is evolving over time, increasing to 60, 70, 80, and then 85% after 2029. So there's a clear guideline for domestic solar manufacturing to onshore to the US. They're giving them time for 2026, you don't have to have 100% of your components produced in the United States, but you will need to start moving that manufacturing capacity to the US as time progresses, otherwise you will be below the MACR threshold. And the most important takeaways from this is that, crucially, this calculation does not account for the cost of solar wafers, ingots, or polysilicon. The main focus here is solar cells and solar modules. So how is the domestic content calculated? Who claims it? The domestic manufacturer who produces and sells eligible components to an unrelated party. And the way it's calculated, the credit is the units produced and sold per unit rate. So what's the economic incentive from these credits? Well, the manufacturer receives 4 cents per watt for every PV cell produced. They receive 7 cents per watt for every module produced. And then you got also incentives for polysilicon in $3 per kilogram, for solar wafers based on square meters, for inverters, battery cells, battery modules. I already covered this with EOS, but the 45X for battery production is $45 per kilowatt hour, and the 45X credits for solar panels are 11 cents per watt. And this is the table of the MACI required, where you can see that batteries thresholds are more punitive than solar thresholds. We also have to cover not only the 45X manufacturing tax credits, but the 45E and 45Y investment tax credits. This is the credit that the customer gets. This is the credit a facility or an energy storage stack starting construction after December 25 is ineligible if construction includes material assistance from a PFE. PFE is broader than just PA from FIOC. It includes specified foreign entities, including FIOC, but it also includes foreign influenced entities. This is the difference between FIOC and PFE, is that it's not only about effective ownership, but also about effective control. And the way you calculate the MACR for the 45Y and 45E tax credits is with a predominant emphasis on PV modules, which they account for 65.8% of the whole MACR. Then you got 5.5% for inverters, and then you got 28.7% for PV trackers. In this calculation, within PV modules, solar cells are incredibly important, accounting for 38% of this 65%. And then you got the frame, you got the front glass, the encapsula, and the black sheet, which represents the remaining part of the PV module. You need to be above 40% in order to qualify for these 45Y and 45E tax credits. As I said, this is the customer tax credit, and this is why having domestically produced solar cells is incredibly important, because they are predominantly the one who will decide if the whole project is above or under the MACA threshold. So it's not only about the 4 cents per watt that you get from the 45X tax credit, but also about the optionality you give to your buyer, which will then command a pricing premium above the 4 cents per watt on the 45X credit. So customers can choose between getting the 45Y, which is the clean electricity production tax credit. They receive this credit as they produce electricity, or the 45E, which is the clean electricity investment tax credit. The 48E investment tax credit is predominantly the one who's being chosen by customers, as they can get 30 and even 40% if they are done in a disadvantaged community, and they get this credit on day one based on the total capex spent. On the other side, the electricity production credit, you will get this through the whole lifetime of the project, which might make more economic sense, but it will have to take into account the cost of capital and the cost of time. So the MACR for the customers, in order to access the investment tax credits, they need to be above 40%, 45, then 50, then 55, then 60% after 2029. And for storage, again, they're more punitive. The way this is calculated, as we already mentioned, is predominantly based on PV modules, but also on PV trackers and inverters. And within PV modules, solar cells are the biggest chunk of it, with 38% of the whole 65%. So let's dive a little bit deeper into the lease terms. So what Canadian Solar did was, as all the capex was invested by CSI Solar, the big manufacturing arm they already have, and this was done previously to the OBBA and previously to FIOC and PFE compliance rules, what they did was, instead of buying the factories from them, they are leasing them from them. The terms here are that they will be paying around $250 million per year for both the US Solar module and the US Solar rent, and also an almost insignificant amount for their non-Chinese production capacities in Thailand. This is from their public filings with the SEC from Canadian Solar. The terms are 5 years, which can be extended for another 5 years. The governing laws, of course, are the US Texas laws. And in principle, the lessee shall be responsible for maintenance and repair. Again, as we mentioned previously, this was one of the guidelines from the OBBA. You need to be the one responsible for maintaining and operating the facilities. If the Chinese company is the one responsible for it, you will not be able to access any type of credits from the United States. And as we can see, this was very well thought. I mean, it's not a coincidence. They were heavily helped by top-tier lawyers. And I have strong conviction that everything is well structured in order to comply with OBBA rules. Within the contractual terms they had, we can see that they expect to be at 80% capacity by Q2 and Q4 2026 for modules and cells respectively. So when they say they expect to be doing 2.1 gigawatts of solar cells and to be expanded to 6.3 gigawatts of solar cells in the US by end of the year, you can gain confidence that this was put into a contract, a long-term contract, specifically outlining what I just mentioned. And the solar rent is not fixed. It will evolve and will increase as the capacity of the facilities increase, so that Canadian Solar is not overpaying while the facilities are not able to meet the capacity they were built for. As I mentioned, another example, the US solar cell facility is expected to reach full production capacity by mid-2026, and this represents 2 gigawatts. So by mid of this year, a couple months away, they should be already at a run rate of over 2 gigawatts per year. Here you can see it, US solar cells, Jefferson facility, expected annual capacity of 2 gigawatts, the total project investment of approximately $670 million. So this was what was invested by CSI Solar. CSI Solar has already invested over $1 billion in these two facilities, and they're now renting them to Canadian Solar. This is another example of how Canadian Solar was a first mover, where they were already producing domestic modules in their Texas plant in the fourth quarter of 2023. So they already have a significant presence in the US manufacturing domestic solar panels for multiple years. As we already mentioned, AJT is a superior long-term solar technology for the US, offering a first principles leapfrog over TOPCon. Both AJT and TOPCon are the two leading N-type technologies. They're both N-type technologies, which replaced legacy PERC. When we say Canadian Solar will be the first company that will have a solar cell manufacturing producer of N-type technology, it represents both AJT and TOPCon. There's no one single factory in the US producing solar cells that are TOPCon. And they're not only doing TOPCon, they're doing AJT with a technological leapfrog over TOPCon. We already covered this, but TOPCon wins on near-term cost and scalability. They have a lower efficiency than the AJT, but they are an incremental upgrade to existing PERC lines. The problem is the US doesn't have any PERC lines in existence today, so there's nothing to upgrade. So if there's nothing to upgrade, turning to HJT is the most rational decision, in my opinion. With no legacy PERC or TOPCon base, the US should invest directly in HJT rather than replicating an inferior incumbent path. And also there's a supply chain fit that is worth mentioning. HJT aligns to US reindustrialization constraints and material availability. They use materials that are more abundantly found in the US than TOPCon technology does. We can see that by end of 2025, Canadian Solar was already operating their module facility at scale, producing over 3.5 gigawatts in 2025, and we can expect them to produce above 5 gigawatts in 2026. And the nameplate capacity of their module production is expected to double to 10 gigawatts peak by end of 2026. This factory is expected to have 1,700 employees, a significant workforce, and clearly aligning with Trump's reindustrialization efforts for the US. This is the 5 gigawatt solar cell facility in Indiana. They have access to a foreign trade zone, which will command custom cost advantages and in global shipments. And it's important to analyze the industrial complex where they're in. It's a super high quality complex where you have tenants including Amazon, Meta, Collins, Medline. I think you also have Costco and many more high profile names, and among them Canadian Solar. This is the industrial map for that industrial park, where you can see here Canadian Solar's assigned parcel. Right next to Meta, for example, Meta has a huge facility here, and also Amazon over there, and many other high-profile names. As we mentioned, there is no US solar cells capacity right now, and the first one to come into operation is Canadian Solar's ones in Jefferson, Indiana. I'm planning on visiting them, but I haven't done already, so I tried to do some satellite work. Does this facility exist? If you go to Google Maps and you triangulate where Canadian Solar facility is supposed to be, it's supposed to be exactly in this triangle over here, where there's nothing. But if you use updated, this is I think a couple years old from Google Maps, if you use satellite imagery, you can see that Canadian Solar facility is already built and it's already operating. So yeah, it's definitely real. This facility was announced in October 2023. So if you think building this facility and bringing them to operation is easy, it's not. It takes multiple years. And Canadian Solar has been on this track since October 30 of 2023. And it's starting operations on March of 2026. So you need to be realistic about the timelines of these projects. And Canadian Solar will and is already benefiting from a first mover advantage in this scenario. Initially, Solar Cell Indiana will have a 2 gigawatt capacity production, which will then expand to 5 gigawatts. This is the standard way of bringing capacity online. It's exactly what TE, one of their competitors, is saying. First, they will start with their solar cell facility with phase 1 with a capacity of 2.1 gigawatts, exactly what Canadian Solar is doing, and then to be expanded to 5 gigawatts, a little bit less than what Canadian Solar is doing. With this configuration of 5 gigawatts of modules and 2.1 gigawatts of solar cells, TE is projecting between $375 to $450 million of annual EBITDA. They still need to build this facility. They just got some financing, but not the full financing for the production facility. They need to start constructing it. They need to bring the equipment online. They need to commission it, and they need to start to ramp up production. So there's a long way till they get there. Canadian Solar is already there. And with this configuration, they expect around $400 million in EBITDA. And when it expands to 5 gigawatts of solar cell manufacturing, they expect around $700 million in EBITDA. What does $700 million in EBITDA look like for both 5 gigawatts of solar modules and 5 gigawatts of solar cell production? It means an EBITDA of 14 cents per watt. What we are seeing from First Solar, for example, is around this type of EBITDA numbers. My optimistic long-term expectation is for the full credits of 11 cents per watt to flow through to the EBITDA numbers, which is roughly what we're seeing from First Solar, and which is a little bit less than what T1 Energy is projecting. Also, you need to take into account that this is for TOPCon technology, and HJT commands a premium. This is another example from some law documents that we had in a law case, where they say that Canadian Solar's US investment now exceeds $1 billion, with a further $1.5 billion planned. And this is some news that leaked on February 9th of 2026, where Canadian Solar is allegedly seeking $350 million in a private credit loan to expand its US operations. We do not know if this is for solar or for batteries, but they're clearly eyeing for continuous expansion. So let's take a quick look into the competitive landscape of US solar domestic manufacturing. We already covered this extensively, but there's ample solar module capacity in the US, but there's basically non-operating solar cells capacity in the US. Some is already under construction, but not operational. We already have enough polysilicon, but not enough wafers, but this wafer and ingot problem is not taken into account into the tax credits as of today, at least. In 2024 and 2025, the US increased its solar cell manufacturing capacity by 2 gigawatts. So in the last 2 years, only 2 gigawatts of solar cells were brought online, and these were PERC solar cells, not N-type solar cells. If all scheduled facilities become operational in 2025, the total capacity of solar cell manufacturing could grow to 12.5 gigawatts. This was published in early 2025. With today's information, we know that it ended the year with 3.3 gigawatts, so well under expectations, because bringing solar cell manufacturing operations online is way harder than people think. Within this competitive landscape of solar manufacturing, the first and most influential player there's out there is First Solar, for sure. So what does First Solar do? They have a different technology than the whole world. They focus on cadmium telluride thin film modules. This is similar and parallel to the EOS value proposition. Its modules are made through a fully integrated thin film process under one roof. They do all, from the solar cells, from the raw materials to the finished product, under one facility, and they're able to capture both the tax credits for cells and for the modules. They have 5 facilities, and this technology relies on more abundant materials in the US than N-type ones do, but it commands a premium. It's more expensive to operate, and in the long term, I do not see it as a dominant technology, more like a resilience, redundancy, and nice optionality technology. First Solar has built 14 gigawatts of domestic manufacturing capacity across Alabama, Louisiana, Ohio, and is building a new site in South Carolina. They already have 14 gigawatts operation for 2026, and they expect to have 17.7 gigawatts for 2027. They are clearly the American leader, and their net income is very impressive, with around $300 to $450 million of net income per quarter, and a gross profit of between 38 and 50%. And their whole income, what you can see here is that the whole income is based on the tax credits. And I think this is what the industry is projecting, what TE is projecting, and what I believe Canadian Solar is projecting as well. And one of the biggest things First Solar has going for them is that they have a huge backlog. They have a total backlog of 54 gigawatts extending through 2030. So they already have the demand lined in place. And that's what's commanding a pricing premium in their equity value, which I think it's fair. Within the competitive industry, we need to acknowledge that Tesla has announced that it is scaling up its Giga New York factory to an initial solar module capacity of 300 megawatts per year. This is nothing, this is a pilot test, but it shows its first efforts to get back again into solar manufacturing. We need to be honest and say, hey, Tesla failed at solar manufacturing. Chinese players dominated that market, and Tesla had to get out of it because it was not profitable for them. Chinese players, backed by their government and backed by sizable subsidies, they ran US manufacturing out of the market. The main key question here is, how American is your solar? It's expected for Chinese companies to have 20 gigawatts worth of annual solar panel production and capacity on US soil within the next year, enough to serve about half of the US market. This is according to Reuters. The thing is, the group includes 7 companies backed by Chinese firms, including Jinko Solar, Trina Solar, GA Solar, Longi, Haunen, Ronergy, and Bobiet. They do not mention Canadian Solar as one of the Chinese companies. They are not. I'm glad to see that. And Trina Solar is the parent company of the later spin-off of TE Energy. Even removing China from the discussion, it is difficult to find a pure American solar manufacturing company in this maturing industry. Maybe Q-Cells from Korea and Silfab and Helium from Canada have some meaningful size, but the only and most American company for the US solar market is First Solar, and then second on that place is Canadian Solar on my mind. Or not Canadian Solar, but CS Power Tech Solar, which is the now newly formed US subsidiary. There are multiple Chinese companies in the US: Trina, Jinko, GA, Runergy, Bobiet, Haunen, and Illuminate. None of them are getting significant size yet because they need to figure out how they will comply with the domestic guidelines. Because if you're left out of the domestic guidelines, you will not be competitive in this market, because clearly the US is not the cheapest place to produce anything. Also, within the competitive landscape, we need to acknowledge that the 7 firms from China are losing up of $4.7 billion in 2025, or $7 billion if we include the 7 leading firms. This is net losses for these companies. Jinko Solar lost $1 billion in the last year, Trina Solar lost $1 billion in the last year, and these other companies, this is in billion of yuan, so you have to divide this by 7, they lost around $1 billion each. We can see that Chinese competitors are incredibly unprofitable, and Canadian Solar was profitable for 2025. An incredibly harsh year for the industry, but Canadian Solar was profitable. Why? Because it's the least Chinese company out there. Also, the Chinese ministry by the end of 2025 met with executives from 14 leading Chinese PV companies. And in this list, Canadian Solar was not there. Why not? Because they're not a state-governed company. They're not influenced by the government as much. They probably are to some extent, because even Tesla in China is influenced by the government. No one can get out of that influence. But they are clearly not a state-influenced company as other Chinese competitors are. In this list, you can see Trina, Jinko, Longi, GL, TCL, Sangro, Tongwei, and GA Solar. And the objective of this meeting was to propose solutions, consolidation, and capacity discipline to encourage mergers and consolidation, to halting unnecessary capacity expansion, basically to make this a more market-friendly industry, to stop overproduction, and to start moving towards a more profit-oriented industry, which Canadian Solar will benefit from for sure. Again, in order to showcase Canadian Solar's dominance, we need to go back to 2018, where they were the leading company in the solar market based by revenue and net income. They had higher revenue than Jinko Solar, they had higher revenue than First Solar, and they were the most profitable one as well. The thing is, after 2018, the whole industry in China, backed by subsidies from the government, they decided to start building overcapacity in a significant way. Canadian Solar was the one who did it the least, and that's why they're the most profitable one, not including First Solar, which is the dominant US player. Now let's go quickly through a list of a couple competitors in the US. among them Helion, which has a 1.3 gigawatt capacity. This is for modules, not for cells. Then you have Suniva, which currently is the only company producing solar cells in the United States, and which had an expected capacity of 1 gigawatt and a plan to increase it to 2.5 gigawatts by the second phase. So they will be a smaller player. They are a smaller company, but currently they are the only company producing solar cells in the United States. Then you got Bobbitt Solar with a 3 gigawatt module capacity and expected 3 gigawatt of solar cell by 2026. We remain to see if they can bring this into operations. They are behind schedule and even more so against Canadian Solar, but this is another company. Then you got Runergy, which is a Chinese-owned company ramping up to 2 gigawatts. Then you got Q-Cells. Q-Cells is the biggest company that's non-Chinese, probably that's from Korea. They have much less capacity than Chinese rivals, and the cell capacity by end of 2026. So they haven't ramped up already. And in 2025, Q-Cell's build-out fell behind schedule. Q-Cell is aiming to get Cartersville fully operational by end of 2026. Again, they're all facing real-world constraints that bringing these operations online is way harder than they expect. The only company that's starting operations for that N-type solar cell factory is Canadian Solar. Their Q-Cells is investing $2.5 billion for an 8.4 gigawatt of solar module capacity. This is module, while Canadian Solar is expected to reach 10 gigawatts by end of this year. And they will aim to produce solar ingots, wafers, and cells. This brings some vertical integration, but I don't know if the economics will make sense for ingots and wafers based on they are not taking into account by tax credits. Again, something more about Q-Cells. Then you got Silfab, another company from Ontario, but their capacity is way, way lower. Illuminate USA, which is a joint venture between Longi and Invenergy. Then you got Corning, which Corning is the supplier chain enabler, which exposes to polysilicon. Corning is probably the only company in the US, and one of the very few companies in the US that's producing domestic polysilicon. TE announced a deal with them. But as I mentioned, polysilicon might be more expensive in the US, but it's not a supply issue. It might be a pricing issue, but not a supply one. Then you got Mission Solar with a negligible capacity, and then you got TE Energy. I want to focus in TE Energy because they already have a higher market cap than Canadian Solar, and they're way behind Canadian Solar. So this, in my mind, is a result of T1 Energy being very good at investor relations and investor communications, but they're way behind on operations. First, I take issue with how they're mocking Canadian Solar. Hey, Canadian Solar, our hockey team got the goal. How did your team do? Like, this sounds very, very weird. I would be concerned investing in a company that talks this way. And then they did I don't know if this is AI generated or if it's real, but Canadian Solar, tired of losing, come work for the winning team. I know already by speaking with employees from the factories that T1 Energy is currently trying to steal many workers from Canadian Solar. Both factories are like 30 minutes away, so it makes sense. It's part of the competitive dynamic, but we need to be realistic that T1 Energy is behind Canadian Solar. They are the ones trying to steal the employees. Canadian Solar already has them and already has an operating facility that has been operating since late 2023. Let's now take a second to watch these two quick videos.
Hi, Russell here with T1 Energy. I'm walking the floor here in Intersolar in San Diego, asking a lot of manufacturers of solar modules, where do you get your polysilicon from? Polysilicon is the raw material at the heart of a solar module, and I'm not getting a lot of straight answers. I'm getting a lot of mumbles and misdirection. Now, maybe that's because 97% of global polysilicon comes from China, and they don't want to talk about that. T1 Energy, we're happy to talk about where we get our polysilicon from. We have contract to get our polysilicon from Michigan, from Hemlock Semiconductor. And that's because if you're going to build an integrated domestic solar supply chain like we are, you really have to start in the United States, have your intermediate steps in the United States, and then do your final assembly in the United States.
So they're boasting about their polysilicon capacity sourced by Hemlock. One, it will be more expensive. And two, it's not that impressive. From this article, you can say, an industry insider saying, yes, polysilicon from non-Chinese suppliers is more expensive, but there's enough of it. What I'm worried about is wafer and to a lesser degree cells. Does T1 Energy get cells from domestic manufacturing? No, because they're not able to manufacture them. And do they get wafer from domestic manufacturing? Probably not, because there's basically non-existent capacity. They do get polysilicon from domestic manufacturing? Yes, but this is not an issue for the supply chain. This is clearly a marketing strategy, but not an operational moat or advantage. And here, this shocked me. Literally, this shocked me. This was misleading, to say the least. Let's take a second to listen to this.
+% domestic content module that comfortably qualifies your customer for Section 48E, which is the investment tax credit that you can claim up to 10% of the project value, right? So that's a pretty powerful economic incentive. And that really is enough of a North Star in the near term is, hey, you get that built, cell capacity is in short supply in the US, right? Q-Cells is ramping up a facility. You've got ours is probably next in the queue. You get some smaller folks who are trying to put together financing, but that's never easy, right? Without the commercial success. And that's a bit of a catch-22 at times, right? Particularly for smaller private companies. So that really is the go-to in the near term here. And I think that's why we talk about it a lot.
Yeah, 100%.
This was incredibly misleading. When he says cell capacity Q-Cells is ramping up, ours is probably next in the queue. He used the word probably to have possible deniability, but he knows that thems are not next in the queue, that Canadian Solar ones is. And they are very aware of Canadian Solar by these taunting posts and by the fact that they're trying to steal the employees from the factory that's 30 minutes away. What I believe is that the investor relations director here didn't want the public to be aware of what Canadian Solar is and what a much better investment opportunity they are than T1 Energy at their current prices. Remember, T1 Energy, this is the team that bankrupted Frey. I mean, this is the team that had battery ambitions and they failed miserably, and now they repositioned to solar manufacturing. They're trying to throw a Hail Mary. They're already valued at 1.5 billion. They're like 50% more expensive than Canadian Solar, which with way less value than them. I do believe T1 Energy could be a $5 billion company if everything goes great. Yeah, but in that scenario, Canadian Solar's US manufacturing facilities are worth upwards of $5 billion, and the company should be worth upwards of 15 times the current price under that scenario. They have no assets, they have no current financing, they have no current cell manufacturing, and they have no ownership of Trina. I mean, they are a spin-off of Trina, but they don't own anything of the solar manufacturing giant. On the other hand, Canadian Solar owns 64% of what would be the equivalent of Trina, and even CSI Solar is more expensive than Trina because they're more profitable and they spend capital in a more efficient and rational way. This T1 Energy team, they have a horrible track record of destroying shareholder value. So the fact that they are valued at a higher market cap than Canadian Solar simply blows my mind. If there are institutional investors here in T1 Energy and Canadian Solar starts running up, they will have to have some accountability and explain to their LPs and their investors how they could miss Canadian Solar when they were so heavily invested in T1 Energy. This is an example that T1 Energy has a module facility in the US, very near Canadian Solar ones. They are doing $210 million in revenue for 700 million of module capacity, which means they're selling their modules at 30 cents per watt, which makes sense. And also, which shows there's upside pricing power if you have US-made solar cells, which they don't. This pricing of 30 cents per watt is with foreign solar cells. So imagine what you could price at if you had domestic solar cells. And again, they're projecting these numbers. Canadian Solar is way more conservative on their numbers, not because they don't have the operational excellence. They are way ahead of T1 Energy. But T1 Energy, as I said, they're very good at commercial, at investor relations and at investor communications, and they're very experienced at raising capital, but not at actually operating that capital, which you can see with the prior battery efforts and what I expect with their solar efforts. I hope they do great. The US needs all the domestic solar manufacturing it can get. But if I have to choose my player for it, it would not be T1 Energy, it would be Canadian Solar. And it's a no-brainer when T1 Energy is valued at a more expensive price than Canadian Solar with none of their other assets. If you think T1 Energy will have 5 gigawatts of solar cell capacity on schedule, think again. This will be hard. It's not because they're incompetent, it's because it is very, very hard. Canadian Solar announced their solar cell facility in late 2023 and it's becoming operational in March 2026. These things take time. These things are super complex. You need to build up the workforce. You need to design the line the most efficient way possible. You need everything, every single I dotted and T crossed. So again, I do think Canadian Solar has a significant first mover advantage in this market. There was a T short report. I do not agree with it. I've seen multiple short reports on very high quality companies, but this is a reality we have to acknowledge. RWE, they canceled their contract with T1 Energy because their panels didn't meet the promised specifications. I'm not assigning a huge blame to T1 Energy, but as you start ramping up module production, issues will happen. They just started operating their module facility. You should expect issues to happen. On the other side, Canadian Solar has been operating their module facility for over 3 years now. So yeah, I mean, issues will happen at the beginning, but Canadian Solar has already passed them, and I expect T1 Energy to have some going forward because it would be only rational and realistic. TE has been very vocal about their domestic supply chain, saying that they were able to source some non-FIOC solar cells from a provider. This is done by everyone in the industry and it's a clear bottleneck. They are aiming to have their own domestic cells produced at their factory, but this will take some time, as we discussed. They're getting domestic polysilicon from Hemlock Semiconductors. As we said, domestic polysilicon is not a supply issue. It might be more expensive sourced from the US, but there's ample supply of it. And they're getting domestic wafers from Corning, which used to be a GA Solar company, a Chinese company. Hopefully they achieve a non-FIOC status. But this is a commodity product and they do not have exclusivity and they will be selling to everyone in the industry. That's my belief. That would be the only rational way to conduct businesses. And they're getting domestic steel frames from Nextpower. Again, they do not have exclusivity with it, and Nextpower has already announced they are providing domestic steel also for Jinko Solar, a clearly Chinese company. So they are very vocal about their domestic supply chain, but I do not see it as a structural advantage. I see it as a marketing tool. Moving on to Jinko Solar. Jinko Solar is also publicly listed in the New York Stock Exchange as a holding company where they hold the Shanghai stock listed shares. They are also heavily mispriced, that's my belief as well, but not as mispriced as Canadian Solar, and they are not as vertically integrated with their own project development arm, and they do not have significant presence in the US. Their share in the United States only accounted for 5% of shipments in 2025. And they're incredibly unprofitable, losing about $1 billion during the last year because they were among the ones that overbuilt the most. And here is a snippet from the latest earnings call where they say, excluding the impact of changes in fair value of convertible notes, changes in the fair value of long-term investments, share-based compensation investment, how much things do you want to exclude? Excluding all this and also the net loss from a fire incident at one of our production facilities in Shanxi province in 2024 and the impairment of long-lived assets. So how much do you want to adjust for it? But even adjusting for all this, they lost almost $500 million in 2025. If you do not adjust for all this, they lost over $1 billion in 2025. So they're clearly one of the most unprofitable companies in the solar industry. And they are starting their endeavor on the battery energy storage side, but they're well behind Canadian Solar and they're well less established on the Western markets. My belief is that Jinko Solar is aiming to be the cheapest FIOC option. So their objective is to provide the cheapest solar panels even if they do not comply with FIOC. If there is some kind of development, particularly for transferring our solar module facilities in the United States to non-FIOC entities, then we will let investors know, but we have been in the process of discussing with potential investors. And also, they mentioned their CapEx plan in the latest earnings call for 2026, and they didn't mention any CapEx for additional US manufacturing operations. So I do see them as a very significant producer, especially in volumes for the solar market, but they're extremely unprofitable. They're super Chinese owned. They're one of the most influential Chinese companies out there in the strategic industries as it is the solar market. They don't have any significant US presence and they don't have any arm for project development. So I see them that they are heavily undervalued based on the value of the Jinko Solar shares in the Shanghai Stock Exchange compared to the New York Stock listed holding company. But that difference is way smaller than in the Canadian Solar side. Jinko Solar is clearly not a US oriented company. Shipments to the US were nearly 1.3 gigawatts in the third quarter. Here we have another example of shipments to the US accounting for approximately 5% of total shipments. So if we do the basic math, Jinko Solar shipped to the US around 4.3 gigawatts, and Canadian Solar shipped to the US around 8.5 gigawatts. And the share this accounts for is, again, significantly higher, also speaking to the way better profitability of Canadian Solar compared to Jinko Solar. We need to take into consideration that NextEra, the biggest utility in the world and one of the most experienced renewable operators, is using both Canadian Solar and Jinko. Here is a snippet from an industry publication where they mentioned they use both Jinko Solar and Canadian Solar panels. Moving on, we need to take into consideration some potential risks, particularly on the litigation side. I do not see them as meaningful as maybe others in the industry do, but I do want to discuss them. First of all, there's an AD/CVD tariff rule that remains to be decided. During Joe Biden's term, he issued an executive order declaring emergency and authorization for temporary extensions of time and duty-free importations of solar cells and modules from Southeast Asia. What this resulted on was a flood of imports from these countries that were tax-free according to the executive order, but then some small solar company in the US decided to do a lawsuit saying this was unconstitutional or unlawful, and this decision remains to be seen. It could result in significant money being paid by both the manufacturers and the developers, but I do not see this having any significant substance, because if this is decided to be unlawful, then the blame falls on the US government. I mean, the companies were told to import as much solar cells and modules as they could because they were declaring an emergency status. Penalizing private companies because of conducting operations based on clear directives from the government seems simply illogical. These penalties will be spread between manufacturers and developers such as NextEra, which was one of the ones who imported the most solar panels during this time. And it seems like NextEra is taking the lead on these lawsuits, and I get significant comfort from it since they are the biggest utility in the world and a significant strategic asset to the US with huge amounts of loading power. Moving on from the AD/CVD tariff litigation, there's also multiple TopCon IP lawsuits around the world. Every solar company is suing each other because they say they're infringing on each other's TopCon's IP. Here you can see Canadian Solar received a lawsuit from Trina, and then they issued a lawsuit to Trina as well, then GA Solar as well, and then Longi received a lawsuit from GA Solar, and Jinko sued also Longi, and BSN and Q-Cells and whatever. Everyone's suing everyone. Based on my conversation with industry insiders, they're doing it more as a marketing tool, and nobody expects significant results from it, as we will see going forward. Everyone wants to be the one who holds the most strategic IP on TopCon, but the thing is, TopCon is a commodity. TopCon will be very, very hard to enforce IP rules on TopCon technology since it's basically a commodity. This is an example of an IP lawsuit for TopCon technology. And the thing is, why is TopCon so valuable? Because it's expected to be 60% of the market share by 2028. The good thing about Canadian Solar strategy is that since they're doing their solar cell factory for HJT, they would not fall under these TopCon IP rules. But nonetheless, enforcing these IP rules is extremely hard. Jinko tried to sue BSN and Toyo, which was settled without prejudice. Then Trina tried to sue Canadian Solar, which was terminated entirely without prejudice as well. And this was on February 2026. Moreover, the remaining of Trina's lawsuit against Canadian Solar and another company as well, I think, was entirely terminated and was deemed unpatentable on April 17th, so only a couple days away. Again, the stock didn't move. Nobody cares about this. It seems like it, but it is a very significant fundamental development where you got a U.S. court saying Trina's TopCon patents were unpatentable, and Runergy and Canadian Solar are therefore not infringing. Trina possesses 2 TopCon patents, these numbers, and portions of both patents were deemed unpatentable. Then we have a comment from Colin Parkin, the president of Canadian Solar, saying, Canadian Solar has always remained committed to organic and independent research and development. We possess a deep and comprehensive understanding of our proprietary technologies. While we respect and value the intellectual property rights of all companies as we do our own, we firmly oppose the abusive use of IP to extort or hinder competition. We will continue to vigorously defend our legitimate business interests. And this is the PR that Canadian Solar issued on April 17th, saying where Trina Solar TOPCon patents were invalidated. So if you believe that Trina Solar holds a technological advantage over any of its competitors, I would think again. I think TOPCon is a commodity, and enforcing IP laws on commodities is extremely, extremely hard. Again, everyone is suing everyone. Canadian Solar also sued back Trina in China because they said they infringed on one of their patents. I do not believe they will get anything out of it, but it's a negotiation tactic. That's my belief. Another example of patent law wins by Canadian Solar, Maxion and SunPower sued Canadian Solar, which they won. Canadian Solar won it by January 15th of 2026. So we got significant developments on the IP laws, all falling on Canadian Solar's benefit. Maxion Technologies is basically a bankrupt company, nowadays worthless, that tried to throw a Hail Mary, SunPower as well. Moreover, there is an ongoing patent law between First Solar and every other solar manufacturer, where First Solar is trying to gate every other manufacturer from building TOPCon solar panels. They do not build them themselves, but they don't want anyone else doing it as well. This is a screenshot from First Solar's investor presentations, where they said First Solar filed ITC action today against 10 groups of foreign headquartered manufacturers for TOPCon patent infringement, seeking the exclusion of imports and cease and desist of infringing product sales. One of my main concerns is that First Solar is one of the best lobbying companies out there, but the substance on their allegations I do not believe are meaningful enough. This is part of Canadian Solar's arguments against First Solar, where they say, for example, the evidence will show that Canadian Solar's method of fabrication does not employ a full area back metal electrode, nor does it lead to shortened charge carrier flow paths, as required by each of the asserted claims. The evidence will further show that the asserted claims would have been obvious and invalid based on prior art that was not submitted to the USPTA during prosecution. So the technical process on how they do their panels does not infringe on First Solar patents, and also there's been prior art within patent law that makes First Solar's claims invalid as well. Again, continuing with Canadian Solar's arguments against First Solar, they mentioned that there are many non-TOPCon crystalline silicon-based products, and indeed the industry publication of the Patent Office relies upon the allege that CS knew that First Solar's ownership of TOPCon credits and cites the very prior art that CS relies upon in its petition as the origins of the accused TOPCon technology. What Canadian Solar is saying is, hey, this technology is based on publications that were done decades before First Solar published their patents, and even in their allegations, First Solar is citing this same art that Canadian Solar is using as their defense. Continuing with this, Jinko Solar is among the companies being sued by First Solar, and their comments on the latest earnings calls is saying, the TOPCon patent lawsuits raised by First Solar. So are you seeing this impacting your shipments in the US, or it does not really affect shipments for now? Their answer from the director was, we do not expect any disruption or impact in our business and ongoing business in the United States. We do not believe we infringed the relevant patents of First Solar, and we did research for the production process. We don't believe it's relevant. We're confident, and there is any impact of our operation in the United States. No one in the solar industry is really taking these patent laws as seriously as maybe other market participants are. Another example of a patent lawsuit win by Canadian Solar is this one in 2023, where their law firm used, which was Sidley, claimed it was a clean sweep across the board, no infringement, invalidity on selected claims, and no domestic industry. Again, infringing on these patents, it's very, very hard because this is a commodity market. Let's move on to the quality of Canadian Solar, which is a main thing I have to take into consideration, particularly as a long-term investor aiming to invest in a company for over 3 years usually. First of all, in 2024, Canadian Solar was named the most trusted energy company in the world. This was done by Newsweek rankings, and this was the PR they released after being mentioned as the number 1 most trusted energy company in the world. And they're even ahead of some big-time names such as Iberdrola or Duke Energy and First Solar. Continuing with their quality attributes, they are a Tier 1 clean tech company by S&P. They are a Tier 1 energy storage company by Bloomberg NEF. They won top brand awards for PV in the US, the world's most trusted company by Newsweek. They have significant attributes that call for their high quality that Canadian Solar has. Moreover, they are pioneers. As we said, they have been a first mover in the whole renewable energy. And this example is in their finance structuring. They did a deal that marks a financing milestone for standalone storage through the issuance that still faces cash flow and liquidity tests. What they did was a combination of the battery energy storage asset with an asset-backed securities and a rate, saying that the filing represents the first attempt to package merchant-style storage cash flow into a whole-type asset-backed security framework resembling an institutional pre-rate product. As we know, financing these products is extremely hard, and the competitive advantage and know-how that Canadian Solar has across the whole spectrum of the renewable energy industry is allowing them to continue to operate and innovate in creative ways to evolve the industry. Moreover, they also did a standalone fund for Japan, backed by Macquarie Group, a multi-billion-dollar company, issuing the fund in order to finance renewable energy projects in Japan. This gave Canadian Solar access to institutional capital in Japan fund that can add green bonds and project finance as it scales. So we're reaching the final stages of this presentation. I hope you've been enjoying it so far. Let's move on to the valuation and financial analysis. We already covered this, but what's the value of the sum of the parts of Canadian Solar? My belief is that at least they have $3.6 billion in equity value based on their CSI Solar ownership. It has a $7 billion Shanghai market cap, and they own 64% of it. And then applying a 30% discount for being a Chinese company, you arrive at a $3.6 billion valuation. Then you got Recurrent Energy with an equity value of $2 billion for Canadian Solar, a $2.5 billion equity value as a whole, with BlackRock owning 20% of it. And then you got their US manufacturing operations, which I believe solar subsidiaries should be able to do $200 million in EBITDA. Applying a conservative multiple of 8 times, you should arrive at a $1.6 billion equity value. And the storage subsidiary should be able to do upwards of $150 million in EBITDA. And applying a 12 multiple because of their higher growth should arrive at a $1.8 billion equity valuation. When doing this equity valuation, we arrive at a $9 billion equity value today, not implying any growth from the companies, but what their asset base should be worth today. With a conservative estimates of fully diluted share outstandings of $90 million, this should represent a share price of $100. And today we are at $13 per share. Incredible upside. This is my scenario analysis. My base case results in $100 per share. My bear case results in $11 per share. So the downside is incredibly protected in my mind. I mean, the market can do whatever it wants, but the fundamental downside is incredibly protected. How do we arrive at the bear case scenario? Well, CSI Solar being worth $500 million equity value to Canadian Solar. This would be a distressed liquidation of all assets at 20% of their book value, representing maximum write-downs. I mean, it's basically a company going bankrupt and saying that their assets are worth nothing, and it still results in $500 million equity value. The same applies to Recurrent Energy. Full bankruptcy are recovering less than 50% of the equity value for US and European assets. And then saying, hey, the US manufacturing of solar and US manufacturing of storage, they basically go bankrupt. Even with this extreme assumption, you still arrive at $11 per share. My base case is CSI Solar being worth $3.6 billion, This is already covered in the previous slide. They own a 64% stake with a normalized EBITDA of $850 million at 8 times enterprise value to EBITDA, less $1.4 billion in net debt. You would get at this valuation. Also, by coincidence, if we apply a 30% discount to the current Shanghai listed market price, we arrive at the same market price. Then for Recurrent Energy, we already covered it extensively. It's basically the same price as BlackRock's early 2024 transaction, $5.5 billion asset base, targeting low to mid-teens levered IRRs with $3 billion in net debt. It implies at $2.5 billion equity or 2 times book value. And then for US Solar and US Storage, for US Solar, I expect a 7.5 cents per watt margin across 6 gigawatt of annual capacity. We know they're aiming for 10 gigawatts, so this is very conservative. And this is almost half of the margin that TE is marketing. So this should result in $450 million in gross EBITDA. Taking into consideration the $250 million in annual lease cost, you should get $200 million in EBITDA at an 8 times multiple, $1.6 billion equity value. These numbers also are conservative because within the EBITDA numbers, maybe you should not take into consideration the interest and depreciation cost of leasing the factory, but I choose to be overly conservative. And for US manufacturing and storage, I expect 5 gigawatts, which is exactly what they are expecting to do in 2026, with a 15% EBITDA margin and a $200 per kilowatt hour average selling price. This should result in $150 million EBITDA at a 12 times multiple based on their incredible growth. It should result in $1.8 billion in equity value. But let's go to the bull case. I mean, in the bull case, this could reach $323 per share, which sounds incredibly crazy, but it's an equity value of $30 billion. Being a top 5 solar producer globally, a top renewable project developer backed by BlackRock, and the first mover in both solar and storage in the US, this does not sound out of the blue, especially if we are entering into a structural deficit of electrical supply. In this case, for CSI Solar, I simply use the current share price of CSI Solar, not applying any discount and not applying any growth. For Recurrent Energy, in my bull case, I assume they're already own and operating 2 gigawatts of solar plus the 2 gigawatt hours of storage being valued at $3 billion, plus a $5 billion development pipeline, which we already covered previously. The pipeline in the base case, based on Claude's estimates, should be worth $6 billion. Assuming $5 billion worth of their development pipeline, less the $3 billion in net debt, you should get $5 billion in equity value. Owning 80% of it, it should result in $4 billion equity value for Canadian Solar. And then for the US manufacturing of solar, I'm assuming 10 gigawatts of capacity, which is what they expect to end up the year at $13 per watt, which is 1 cent less than what TE is aiming for, and a gross EBITDA of $1.3 billion, less the lease cost, you get a $1 billion net EBITDA and a 10 times multiple EBITDA number, you get to $10 billion in equity value, which I think is the thing that T1 investors are aiming at. Well, that's the bull case I'm assigning. It's not my base case, that's as some T1 investors, but it's my bull case. And the same for storage. I'm assuming a 20 gigawatt hour at full with the margins of basically the production tax credits of $45 per kilowatt hour. This should result in $900 million in EBITDA at a 12-time multiple, and taking into account they probably have to finance their factory build-out. And based on industry expectations, this should be around $800 million. This implies a $10 billion equity value. So basically, I say, hey, the US solar manufacturing arm could be worth $10 billion for sure. The US manufacturing of storage could be worth $10 billion for sure. I mean, EOS Energy got to that valuation with delivering 300 megawatt hours in 1 year. They're different products. I'm very bullish on EOS Energy. They're not a commoditized product because they have differentiation, they have structural advantages, but yet the sheer size of Canadian Solar in battery storage should be taken into account when valuing these companies. And this all results in $323 per share. I mean, I know this is overly optimistic probably, but if you digest every single component that goes into it, it doesn't seem out of the blue. This is my optimistic scenario. I only apply 15% of a probability of that happening, with the bulk of the probability falling under the base case, and the bear case being almost 3 times as much as the bull case. and it still results in a probability-weighted expected value of $100 per share. Just bringing this up again, UBS is the only sell-side shop that is doing any kind of work. They're still giving a $37 per share price target. This was done after the share price rose significantly. As we know, sell-side analysts, they only upgrade their price targets after they are forced to. But still, the way they calculate this price target is by applying a 90% holdco discount to their CSI ownership, valuing Recurrent Energy at similar numbers as I do, and applying no value to their US operations. So imagine if they did the actual work to get to a more precise price target. Within the valuation and financial analysis, we need to take into consideration First Solar. They are worth $25 billion in market cap company, and they're valued at 2.7 times book value. If that happens to Canadian Solar and it achieves a similar valuation, it would be a $100 per share stock. They have a significant backlog, but the sheer size of the company with 17 gigawatts of modules sold in 2025, it's still lower than Canadian Solar, and they have no presence in battery energy storage, and they have no presence in project development. So First Solar is a monster, but I think Canadian Solar is an even bigger monster, trading at 5 cents of what First Solar is trading at. Of course, with a different type of profitability profile, but still, the gap is simply too big to ignore. Already covered this. Canadian Solar is doing $1 billion in RMB in profits for 2025, while Jinko Solar lost $6.5 billion in RMB in the same year. And this is simply some charts to show how Canadian Solar's price to book value evolved over time. Still trading, this should be updated because the share price took a plunge. It used to trade at 4 times. It wouldn't be hard to imagine at a moment when it trades at 2 times book value and maybe upwards of that, particularly if we're entering into a structural undersupply of electric equipment. And again, they produce solar modules, battery energy storage assets, and they also produce their own self-developed inverters as well, while they are a project developer with the most expertise in the market as a whole. So to conclude, what's my conclusion? This is a screenshot of my report that I did on Canadian Solar, which was a little bit more concise than this presentation. But the conclusion is Canadian Solar represents one of the most asymmetric investment opportunities we have encountered, a multi-segment energy business with billions in hard assets trading at a fraction of its intrinsic value. Each business unit tells a compelling story in isolation. Together, they tell an extraordinary one. CSI Solar is a world-class manufacturer that has never reported a loss in over a decade, yet it trades at a fraction of First Solar's multiple. Recurrent Energy is one of the largest renewable developers and operators in the world, with a BlackRock investment that alone implies an equity value above the current market capitalization of the entire company. And CS Power Tech is the highest upside segment, one of the only vertically integrated US solar and storage manufacturers at the precise moment when domestic content requirements make that position worth billions. The floor is not just clear, it's reinforced by multi-billion-dollar hard assets such as factories, energy projects, concrete, steel, and long-term power purchase agreements. We're buyers of CSIQ, and we have made it our largest position. The key points to take into consideration here is that the hard asset base is worth multiples of the current capitalization. They are an industrial behemoth, having moved and transformed over 12 million metric tons of material into generating assets. Those 170 gigawatts of solar, they would roughly represent 12 million metric tons of raw materials. Imagine the size of that. They're turning rocks, sand, raw materials from the earth into energy generating assets and at a huge, huge scale, and they're worth $1.2 billion in market cap. They have 3 independently valuable business units, none of which are priced in. There's a China risk that is overstated and is depressing the valuation of businesses with no China exposure at all. And they're the first US N-type solar manufacturer at the right moment in domestic energy policy. BlackRock's recurrent investment implies equity value alone above of current share price, and they have a proven track record in solar and battery storage, with growing orders from utilities, data centers, and global infrastructure funds. They have a significant conglomerate discount with multiple re-rating catalysts ahead, and our valuations imply $100 per share in our base case, a bull case that is simply too crazy to talk about with over $300 per share, and a bear case with everything going wrong and everything basically going into bankruptcy and still at $11 per share. And here we have some miscellaneous slides. I will cover them very quickly. How PPA prices have gone up in the last years, we already covered this. The solar panel costs have fallen significantly. This we already covered. Electricity is the new king. I already talked about this, but I believe electricity is the energy form that will be most demanded in the future. This is a too long.
And to power those data centers.
Great video to watch from O'Shaughnessy and one of the best energy traders in the world, being bullish on renewables. And this is a quick exchange between Elon Musk and Sundar Pichai, the CEO of Google, saying, indeed, we should scale solar so much more. Amazing that we keep looking at alternatives when the most obvious path is staring at our eyes, literally. I mean, these are two of the most influential company executives in the world agreeing that solar is staring at our eyes, literally, and we keep looking at different alternatives. We already have the winning alternative, and it's solar plus storage. We already covered this, and this is probably worth mentioning, where the utility scale of solar, the capex breakdown, solar modules only account for 35 cents of the total capex cost of $1.23 per watt. So they are roughly 28% of the total capex cost, and they do have pricing power to increase their prices because the percentage of their capex cost is not 90%. The project does not depend entirely on the pricing of the solar modules. Everything else, going from inverters to EBOS to SBOS to labor, design and permitting, taxing, and developer costs, they all account for a way more significant chunk of what the price of the modules actually are. This is basically the same breakdown, but in different types of the solar industry. For example, residential is way more expensive than large-scale utility solar. Social media, some people agreeing that Canadian solar is very undervalued. OEM portfolio, this is the market dominance. This is the market size of the industry based on China, Korea, Malaysia. China clearly has the biggest solar industry in the world, valued at $274 billion. And then the US is roughly $4 billion, with a lot of upside to grow. And here's the different pricing of modules in the world. This big circle is clearly China, priced at around 11 cents per watt. And this second biggest circle is clearly the United States, priced at around 30 cents per watt. How battery energy costs have fallen down, and how battery energy at installations will grow significantly in the future. Credits and the thresholds that are needed to qualify for these credits, we already covered them. The enterprise value to EBITDA multiples that many of their competitors trade at, well above 10 times EV to EBITDA. And another valuation comparative table where you can see that the enterprise value to EBITDA multiples have an average of 10 times in power generation and 24 times in solar energy equipment. Maybe a quick rundown on my Excel sheets. This is some valuation comps on the incredibly low price to any multiple that you want. The TGUS model, this is something I subscribe for, that gives you a very in-detail model of the business operations. These are CSI financials imported from the Shanghai public disclosures and filings, where you can see that CSI Solar has been generating an operating profit between 360 million to 485 million, and still in the worst year of the whole industry, they were able to generate operating profit while all of their competitors were losing billions during the year. This is how you calculate the difference between Canadian Solar holds consolidated results minus CSI Solar's financials. These are CSI Solar financials, competitors' KPIs. Here is where I look at the different competitors and what's their net profits, and how Canadian Solar is the only other company besides First Solar that is generating a profit. Based on revenue, CSI Solar and Canadian Solar, here is that Canadian Solar is higher than CSI Solar because it has some recurrent energy revenue, even if it was not that meaningful in 2025 because they did not sell as many projects. And here is where I calculate the volume size based on every competitor and what's the market share that CSI Solar had, which got to 8.4% in 2022 and has diminished to 5.2% in 2024 because they were the ones who overbuilt the least. While, for example, Trina Solar in 2022, they only had 21 gigawatts of production, while Canadian Solar had 14, but then they rose this production to 80 between 80 and 90 for 2025, while Canadian Solar only did 24 gigawatts. Not only, I mean, that's huge, but they clearly were the ones who overbuilt the least in this industry because they are the most disciplined with capital allocation. Why? Because they are the least Chinese company out there outside of First Solar. This is the pipeline analysis that I did for Recurrent Energy and how it has developed, both for solar and for storage, then breaking it down by geography, Latin America, EMEA, Japan, Asia Pacific, China, and so forth. This is where I analyze how the Recurrent Energy's electricity revenues evolved. Already and to finalize, let's do a quick search on CSIQ on X or Twitter. Nobody's talking about CSIQ. If we go to the latest posts, no one is talking about Canadian Solar. They're all bots that I don't know, they're like, no one is talking about them, literally. There are multiple news that came out getting gigawatt hour orders. Everyone is saying this is literally a bot saying CSIQ and sooner remain useful because solar link exposure trades. No one is adding any value. No one is covering the company, and I believe it presents one of the most significant opportunities out there. I believe it's the most undervalued energy asset in the whole world. I hope you enjoyed it, and please, any feedback, any comments, any questions are more than welcome. I love how X works as an aggregator of information and that the community's intelligence is greater than anyone's individual. So I would love to continue this due diligence process with everyone here. Please join the discussion, and looking forward to exchanging comments, thoughts, and insights. And thank you deeply, deeply for taking this time to watch this whole video. I know it was super dense, it was super long, and I deeply appreciate your time.